Getting those exceptions from the U.S. in terms of sanctions around export controls to China, it looks like ASML may benefit from that, given it was such an overhang, not over just the company itself, but over the Dutch government. That may show up at the market open.
Absolutely. So tech stocks certainly in focus, and that would be a real change in direction, a change in narrative on that tech regulation story or that tech export story, relations with China for the broader Western economy. So we'll certainly watch that. So the markets are now open. We are getting a slight move to the upside on the FTSE 100, but early days, the IBEX up by 0.2%. And Critty, to your point, we've got a range of themes coming through in the earnings stories. There's the buyback at HSBC, an upgrade to guidance at GSK, but disappointment around some other European big heavyweight names, the likes of Airbus. So some mixed dynamics when it comes to the earnings stories, perhaps this morning. Maybe that's all being overshadowed by moves higher in oil prices, by some of the reduced expectations of tariff trouble, if you like, for the likes of ASML. But the CAC 40 then up by 1.2% this morning. We'll keep an eye on L'Oreal when it comes to the French market. Maybe that was all in the price, as we were hearing from Joe Easton, given headaches around China have been well flagged, of course. We have the FTSE MIB up by 0.4%. So we are seeing some pretty strong gains coming through across these European equity markets with a host of quite divergent drivers for market sentiment this morning then, Critty.
Well, let's dive into what's driving the very story you laid out. And I think you nailed it when you talked about some of that oil price story, because it's that outperformance that's moving the FTSE 100 higher. Your biggest index contributors to the upside are going to be Shell, BP, Glencore. You are also seeing a little bit of a move in some of the other broader commodity names like Rio Tinto, for example. This is crucial given that we are seeing already an oil price, some of that geopolitical tensions fading in as well. But when you look at the downside, I should mention the FTSE 100 seeing some pretty broad green on the screen. But to the downside, GSK is taking a fairly big hit and weighing on the index, but of course, not to the extent that you are seeing some of these upside movers. That is at least the FTSE 100. That is very, very crucial. But when this comes to stock 600, that's where the French stocks are taking the lead. Airbus, for example, your biggest index contributor to the upside, higher by 6.5% this morning, Anna. And that is, of course, in kind of the downside of some of the banks as well. We have HSBC, which is moving higher, but then BBVA, which we thought would maybe move higher, actually doing the exact opposite, taking a bit of a hit down 1.3%.
Yeah, let's have a look at some of the individual movers then in focus. Interesting to see that Airbus is up by 7%. That despite the fact they took that large provision around their aerospace division. We'll get an update on what's really going on there and expectations now post the earnings report. And we'll hear from the CEO a little bit later on in the program. So we'll get some further details there. Schneider Electric up pretty strongly on the back of their earnings numbers as well, up by more than 4% this morning. Interested to see where ASML trades. I think that one is still closed. I saw a headline across the Bloomberg terminal saying the shares are halted at the open in Amsterdam. So we're certainly waiting to get an opening price there that suggests that tech story, and we're looking to get more details on it, but that tech story, a shifting expectation about the extent to which US export policy is going to apply to Japan and the Netherlands. That's going to be something we're watching there. We're watching it through the Asia session. Tom McKenzie flagging for us to watch it here in Europe, and it seems as if it could be something of an important mover.
Yeah, you mentioned Japan, Netherlands. I'm going to add South Korea to the mix as well. That's going to be a crucial one. But of course, these are the three major export markets. So then we're going to have to go into conversations about how the U.S. policy may shift around that. At least it's the broader story. Geopolitics really showing up, Anna, in the forefront of some of these conversations. Let's see how it shows up in the markets. Already you're seeing some of those individual moves. I want to bring in our next guest here, Morgan Deldon, Head of Investment Strategy over at Global X ETFs, joins us around the table. Morgan, I imagine you're getting your head around some of these earnings just as fast as we are, but I think we should broaden out the story, specifically because it's not just these micro moves we're keeping an eye on, but specifically what the BOJ does, the Federal Reserve, the BOE tomorrow. Take your pick. Where would you like to start?
It's a really busy week, but I think markets is really focused on what the Fed is going to do next. And with the Fed's coming, I think what I will be really closely watch is the tone of the press conference post-meeting. Because at the moment, what we're seeing is the market expectations are higher than what suggests the dot plots from June. After March, in June, there was an upward revision of the dot plots, indicating probably just one rate cut. However, the market is pricing in between 2 and 3 rate cuts for the year. So there seems that the expectations are unanchored with the Fed. So depending on either Jay Powell is going to be dovish in line with what market expects, or is going to be more hawkish, will be an important information on whether he wants to set comfort to the market with potentially 2 to 3 rate hikes, or it wants to prepare the market for repricing it down to 1 rate cut. I do believe that the current conditions in the U.S. economy suggest that 1 rate cut is probably a good bet for the year.
How does that show up in the market reaction, though? Because to your point, the markets are already pricing in 2 rate cuts. Some would argue that if we do indeed get that indication from Jay Powell, the markets may kind of shrug their shoulders and say, we told you so. But I'm curious whether that might even be received as a negative, given the cracks in the economy, maybe signal a little bit of panic. What do you think?
I think we could see some of the reversal from the rotation towards small cap we've seen earlier this month. This move was really triggered by the expectations of lower rates, given that small caps have more like variable rate debt. But we could see some of the reversal, and we need to into like more large cap and potentially big tech companies. And this is happening at the same time with earnings of these big tech companies, which is another topic that is really on top of mind this week, given that there might be more divergence between the Magnificent Seven group. Market seems very focused on seeing return of investments in AI to really support some of the tech companies within this group.
One of the stocks that catches my eye this morning, Morgan, good morning, is JDE Peet's, which is a coffee processing business operating out of the Netherlands. And that stock really on the rise, up by more than 17% this morning on the guidance upgrade that they're giving us. And we do seem to be in a situation where some companies guiding higher, benefiting from the market's response to that. I'm thinking, well, GSK guided higher, not quite such a clean-cut response from markets. But we're seeing some areas where we get upgrades to guidance, other areas where markets are less sure, less firm-footed. What are you making of the earnings story so far and the reporting season so far and how it's going down with markets?
I think there is a real difference between internationally exposed companies and domestically exposed companies, and that's true across all regions, like Europe, the UK, but also the US. And I think at the moment what we're seeing from economic numbers is that consumer spending is quite resilient, given that there is a strong wage growth that surpasses inflation. So all these domestically oriented companies should do quite well, even in this volatile environment, and be a little bit more immune to what's going on outside these regions, such as the slowdown in China, which might impact more of the highly internationally exposed companies, such as in the FTSE 100 or the Euro Stoxx 50.
And I'm thinking about, so you're mentioning the domestically exposed ones, and that's an area perhaps to focus in on. Perhaps also the changing nature of restrictions on some global, enormous businesses. I'm thinking of ASML this morning. We are watching this story developing around the extent to which the US will or won't try to control export licenses for ASML, for the Japanese chip makers, for the South Korean chip makers. I suppose the relationship with China and the geopolitics around it is still something we're learning a lot about and still very much in flux, especially as we make our way towards November and what could be a shifting policy backdrop from the States.
Absolutely. I think that's exactly the reason why volatility might stay very elevated up to November, when we get more clarity around the future policy and trade policy in particular between the US and China, but also the US and Europe. So all these political landscape, which is highly uncertain, on top of uncertainty around economic numbers, which are sending us a very mixed picture so far, is really contributing to high volatility. So more cautious approach from investors. I do believe that's what's going that's what we're going to see in the market.
How does that square there then with maybe the tech trade that we're seeing over in the States? Because in the flurry of earnings this morning, I think we've forgotten to mention that Microsoft, of course, came in not that great when it came to cloud services. They were punished in the stock market after hours. And I'm curious what the read-through is into the global tech story when, to Anna's point, you are seeing the geopolitics drive so much of that, like this morning with ASML. But then what is the translation from perhaps some of the pain that we're seeing in the S&P 500 into, say, the stock 600?
Well, I do believe that given regional ambitions to become the leader in this digital transition, we might see more competition coming up with more protected regions in terms of trades, and therefore these magnificent seven, which has led the market and potentially being a catalyst and could continue to be a catalyst in the near term, we might see a diversification of this basket later on with more European names, Asian names, which will lead in their own regions compared to what we're seeing currently with only this magnificent seven really leading in the tech sector.
What's the next leg of the AI story then, Morgan? Because we became very obsessed with NVIDIA and that stock and that company's ability to deliver on AI. Now we're seeing signs that maybe AMD is going after some of NVIDIA's market share. There's a lot of pressure on other big tech names to justify the amount of capex they're spending. What's the next leg, do you think, of the AI story? What are you watching for?
The monetization of AI investments. So really, I think that's going to be discriminating among all these companies and really show who's the leader. But I think another area which is very important to watch in these tech sector is the vertical integration of the big tech companies with cybersecurity, but also AI, cloud. We're seeing a tremendous growth in terms of how quickly the market is maturing. And I think this is what could be like, I do believe it's going to be a catalyst for the months ahead.
Well, a race to monetization, but in the process of that, you are seeing a giant amount of investment from some of these big companies. Microsoft, the jump in CapEx investment was massive. And I'm curious if that's simply because they're sitting on so much cash right now. Some of that is a little bit of the kind of massive issuance they had during the pandemic and during the kind of ultra low interest rates there. But I'm curious when that CapEx spend catches up to them. In any other industry, in any other sector, that would be a little bit of a pain point. When will that show up for tech?
It's very different, and what we see from the earnings results so far is a very positive contribution of AI in Microsoft, but not the same for Alphabet. So we're seeing some divergence, and this is really what I want to emphasize here, is CapEx in AI is definitely being seen as positive so far by markets, but now the market is expecting to see materialization beyond this from this CapEx. So I think that's the next step.
We want to see monetization then of the AI spending, all that CapEx. What's it for? What's it going to deliver? And this applies to not just the likes of NVIDIA or Microsoft, but much further along the supply chain. And as the AI effect travels along these supply chains, Morgan, when does it start to become a macro policy consideration? Back to where we started the conversation, back to the Fed, the BOJ, lots of central banks around the world looking for productivity gains.
Absolutely, and what we're seeing from Q2 results, but is that there is productivity gain from automation, but from integration of more technology. And for the first time, there is no productivity gain from cutting costs, cutting salaries or workforce. And this is positive from a macro story standpoint. So I do believe that higher interest rates, the only way that is sustainable is because we've got this technological shock that will make the potential of global economy, but especially in the developed world, higher. And I think this is really the whole macro story currently.
All right, Morgan Deldon, we have to leave it there. We thank you so much. Head of Investment Strategy over at Global X ETFs, talking to us a little bit about that tech trade and the next steps there. And speaking of, let's get a check on the sensational six, because ASML seems to be blowing this market out of the water, despite several earnings stories that we're going to be keeping an eye on. ASML higher by about 7%. I think your eye goes straight there, higher by about 7.4%. Of course, this coming off of that story that we were just talking about with Morgan there around the chip exports, Japan, South Korea, the Netherlands getting almost taken out of the equation when it comes to the U.S. getting tough on those chip exports to China. LVMH also rallying, though, higher by 0.9%. Novo Nordisk in on the party. The one that isn't is Ferrari, down about 0.2%. Even Nestle remains unchanged. So those are your underperformers. But tech very much in focus, at least when it comes to your European mega weights. Let's get a check on some of the other individual stocks on the move. Joe Easton, drinking out of a fire hose, it seems, this morning. Joe.
There's enough to choose from today, Chrissy. As you say, the first place to look at these chip stocks, ASML, was up around 10% at the open of trading, the biggest gain in 4 years for that company. It is this Reuters report saying that the Netherlands will be among countries potentially excluded from these restrictions on US trade with China in terms of chip technology sectors, and we're seeing a gain across that space as well. BE Semi gaining, and also a bit of a boost for ASM and Infineon as well. Really the highlight of the tech space today. But it is more about corporate earnings. We've got a lot to get through on these screens. Airbus gaining, recently had a profit warning, but it looks like they are reassuring on some of their cash flow targets today. But a big decliner in Germany. Siemens Healthineers, the maker of MRI scanners, seeing weakness in China according to their statement. Glaxo actually upped its guidance. HIV, cancer, all doing well at the moment in terms of their drug sales, but coming down potentially not as much as what analysts had been hoping for. And HSBC getting a boost following that $3 billion buyback announced by Noel Quinn earlier today. Then in terms of some others, JDE Peets, you mentioned that one, feeding all of our addictions to coffee, up 20%. They are grappling with a spike in the cost of coffee beans. They do seem to be passing that on, convincing people to splash out more on their morning coffee. L'Oreal gaining around 1%. That looked pretty weak over in China, given some of the declines in skincare products there, but actually potentially that priced in. And BBVA, in the midst of that takeover with Sabadell, they've actually announced some of the cost-saving measures that will be included in that deal if it gets approved, and that looks to be not as good as some analysts were expecting. Just Eat Takeaway getting a boost from all of us sitting at home watching the Euros, buying more takeouts according to their report today, and that one is up 8% at the moment. We'll have a look at some geopolitical focused stocks as well. You mentioned that earlier. BP and Total Energies gaining a spike in the oil price given the simmering of tensions between Hamas and Israel overnight. That's getting the focus there, and a bit of a gain in some of the defense shares for the obvious reasons on that one as well. In terms of the morning calls, there was just one that stood out to me today. It's Euronext. Now, this one reported some very strong numbers recently. The owner of the Amsterdam French Stock Exchange, all of those around Europe, recently reported really strong revenue, but Goldman Sachs becomes the only bank with a sell rating, saying the rally has gone too far, and that stock is declining 1.3% over in France this morning.
Joe, thank you very much. Joe Easton from our equities team with a rundown of some of the many corporate stories that we're tracking this morning. We'll get back to the banking sector shortly. Coming up, HSBC shares are higher this morning as Noel Quinn signs off as CEO with a $3 billion share buyback. We will hear from our interview with Noel Quinn and get you some analysis. This is Bloomberg.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the opening trade. We are 20 minutes into the European trading day, and you see some upside across a number of these markets. We're up by more than 1% on the FTSE 100, on the CAC Carron, the AEX over in Amsterdam, also up pretty strongly today, up by 1.6% on the back of that move in ASML. More on that sector, the tech sector, shortly. Let's go first to the banking sector, though. We're seeing some substantial moves in some of the players there. HSBC in the green this morning after the business announced a $3 billion share buyback. The lender reported second quarter pre-tax profit of $8.9 billion, beating estimates. Earlier, the CEO, Noel Quinn, spoke to Bloomberg's Jumana Besetcha.
We're retaining sufficient to drive growth, and we're distributing any excess because we've still got a very strong capital ratio, CET1 ratio. We're quite well above our target range. Therefore, we're able to both grow and distribute via buybacks. We do not pre-announce buybacks. We do it on a quarter-by-quarter basis. But I'm pleased that we've announced $3 billion today. And it's a function of the high returns that we're generating and the good profit performance we're generating and our confidence for the future. The other thing we announced today is a new target, a new guidance of mid-teens returns for 2025. That's a new piece of information we've put into the market. That is evidence of our confidence of our ability to continue to deliver good, strong financial performance. Even if interest rates come down, we've built alternative revenue growth strategies to provide us with the sustainability of returns going forward as interest rates come down.
Yeah, let me ask you about that, because I see that you now expect banking NII of around $43 billion for 2024. I believe that number before was $41 billion. So a slight upgrade coming through there. Some would say it's surprising because HSBC is one of the banks that is more sensitive to a lower interest rate environment. So why did the upgrade come through?
Two reasons. Firstly, well, probably three reasons. One, the yield curve has shifted to the right a little bit. The declines are taking place slower than originally. But the most important factor, if you go back to around about 2022, our sensitivity to interest rate declines back then for a 1% decline was around about just over $7 billion. We reported at the end of last year that $7 billion had come down for a 1% decline to around about $3.4 billion. We reported at this half year that a 1% decline has now come down further to around about $2.6 billion. So we have consciously put in structural hedging that lessens our sensitivity to interest rates. But as importantly, we've also grown and invested in alternative revenue streams and business activities to drive revenue growth from non-interest dependent sources, fee income, wealth management, transaction banking, internationalization of our client base. And as you saw in the first half, our revenue from wealth management was up 12% year on year. A very good second quarter performance following a very good Q1 performance. We're seeing resilience in our transaction banking fee income. Fee income, I think, grew by around about 4%. So what we're doing is we've lessened the interest rate sensitivity, and we've invested in alternative business lines to grow revenue from other sources. And that's what's given us the confidence to announce a mid-teens return target for 2025, and have confirmed our target for 2024.
That's Noel Quinn, of course, of HSBC. Let's get more on this story. Bloomberg's Tom Metcalf joins us here on set this morning. Tom, good morning to you. So Noel Quinn's swan song, if you like, his last set of earnings. He was talking there about how they reduced their reliance on the higher rates and the net interest margin story. What else stood out to you?
Yeah, I mean, it was almost like he was enjoying himself, right? Like, kind of, it is probably the kind of set of results we were expecting. You know, as you say, a swan song. You know, broadly speaking, CEOs love to go out on a high. And so for me, you know, the big thing was that buyback, $3 billion. You know, for me, that was above the expectations, maybe more around the $2 billion mark. So, you know, definitely kind of a big push there. And you can see it in the share price today, up something like 4%. And broadly speaking, you know, this is the end of Noel Quinn's tenure. It does look quite a cohesive period in terms of he's stuck to the strategy. He's going out saying the strategy's still working. And, you know, I think his predecessor was saying the same. Oh, sorry, successor was saying the same.
Well, tell us more about that. His replacement already hitting the wire. What do we know?
Yeah, very much on message, basically saying, hey, look, you know, we're in a great place. We want to double down on our strategy. And what HSBC's been doing really well is keeping a lid on those costs. And just sort of managing through what can be a pretty volatile period. So it maybe hasn't hit sometimes the heights of other banks during, you know, kind of the interest rate rise, but equally it hasn't sort of, you know, really struggled as those interest rates have started to cool down. So, you know, El Hedri here, talking to analysts, talking to journalists, setting out his stall, but that is a stall that is effectively, we're going to keep sort of following the same pattern. We believe in the strategy, and it's my job just to basically continue implementing it, and maybe do that a bit more sort of aggressively.
So the same stool?
Yeah, exactly.
Okay. Well, speaking of implementation, very quickly, Tom, putting you on the spot, one of your biggest movers to the downside in terms of index weight is BBVA. Despite a net trading beat, why is the stock down?
Yeah, it's quite interesting to look at that. You know, the big set of results for them. It's their first since, you know, they came out with the Sabadell offer. And I agree. On paper, it looks like a solid set of results. Whether people had inflated expectations or thought, you know, with that pressure of that deal, maybe they'd really be sort of, you know, putting everything on the table this quarter. It could be that. Or if you really want to play games with it, it could be that the shareholders are like, uh-oh, this good set of results makes it more likely this Sabadell deal is going to go. Yeah. We don't like that deal, so the shares fall down a bit.
I'll also add that Bloomberg Intelligence, I think, coming out with an instant reaction, talking about that the net trading income beat is actually low-quality net trading income. So we'll add that to the mix, because there's a lot going on here. Of course, BBVA drinking out of a fire hose. Tom Metcalf will leave it there, giving us a wrap-up of some of the banks that are moving in trading this morning. Coming up, we're going from the banking sector to the makeup sector, I guess. We're going to be diving into L'Oreal's sluggish sales growth in the last quarter, what's driving it, where the weakness is coming from, despite us talking about some weakness coming out of China in LVMH's kind of makeup offering and Sephora as well. Do we see the same story in L'Oreal? We're going to dive into the details next. This is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as, you know, moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything.
This is the opening trade, 30 minutes into today's session, and this is the picture across European equity markets, up by more than 1% on the FTSE 100 and the CAC 40, and certainly on the AEX, up by 1.6% on the Dutch benchmark. Let us talk about the driver of that move. Shares in ASML and other Dutch chip equipment stocks are gaining this morning after Reuters reported that the US planned to exempt chip tool vendors from Japan, the Netherlands and South Korea from upcoming export restrictions. Let's bring in Bloomberg's Tom McKenzie. He's got more details on this story. So, Tom, take us through what we know, what's in this report so far. What's our understanding?
Okay, so this is a report from Reuters, and what it's suggesting in this report is that these additional restrictions that the US have been planning for quite some time, that are expected to kick in potentially next month, will exclude the Netherlands, Japan, and South Korea. These restrictions involve the Foreign Direct Products line or policy or act, which allows the US and gives them the authority to restrict the sale of equipment into the Chinese market if they contain any elements, any equipment, any hardware, any software from US companies. So it is a powerful tool that the US are looking to reach for. But here's what's consequential, and here's why ASML is moving. They have been carved out of this new restriction, again, according to this reporting. So it's really fascinating in terms of how the US is thinking about this. Countries like Taiwan, by the way, and Malaysia have not been excluded, again, according to the reporting. So you're seeing big moves in companies like Tokyo Electron in Japan, and of course these sizable moves right now in ASML and ASM. Of course, these key makers, ASML, key maker of these extreme ultraviolet lithography machines, in terms of the shipments and the ability for them to ship some of this kit into China.
Walk us through that. I mean, I guess I'm confused about if you take out Japan, South Korea, and the Netherlands out of the equation, what is the point of these export rules, specifically because this has been something that's been kind of, to your point, an overhang over these companies for a very long time?
And that's a really, really valid question. So one point to make is that we know that the Netherlands, via ASML, and also Japan and South Korea, have been pushing back against these further restrictions because of what it would mean for their market share in China and their ability for these companies to drive revenues that are then ultimately put to use in terms of R&D, in terms of expanding and growing on that innovation and keeping these companies at the cutting edge. Now, let's not assume and let's not take from this that ASML is going to be shipping all of its high-end kit into China. That's not going to happen. They still face restrictions, as do their counterparts in South Korea and Japan. It's just that these restrictions in terms of the most aggressive part of this component from the US, looks like ASML and others, the Netherlands, Japan and South Korea, will be able to get around that if they are carved out of these restrictions. Interesting, in the US companies, US chip makers have been lobbying for these kind of changes because they say we're being impacted because we have to abide by all of these very rigid restrictions. We're losing that market share in the US, and that is opening things up to our competitors in Japan and the Netherlands who are taking advantage of the slightly less restrictive restrictions.
Yes.
So there's pressure from multiple sides on this, and we're obviously assessing what it means ultimately. There have been many who have said as well that, you know, if you freeze China out completely from this kit, it just allows them to double down on their own investment and ultimately close the gap. And that's been the argument made by executives at ASML.
And ASML is up 7.6% as we try to understand exactly where the dynamic shifts next. And important to note, perhaps, one JP Morgan analyst saying this morning, Tom, it's unlikely, to your point, it's unlikely to mean that export restrictions won't apply to these US allies, but that the US will probably negotiate with these countries on planned restrictions. So we might not be at the end of this story yet, but at the moment, in the near term, as you say, there is some relief.
Yeah, it's certainly one. Then we have to factor in kind of the earnings story out of tech as well. I'm really curious to see how the U.S. tech session trades off all of this. Bloomberg's Tom McKenzie giving us the lay of the land of how we are supposed to interpret some of the geopolitical news. And, of course, that market move at ASML shares higher by over 7%. Well, another market move that we're keeping our eye on is in L'Oreal, where they're pairing some of their earlier gains. This comes after the cosmetics giant's latest numbers showed strength in the European market in the second quarter, but sluggish sales everywhere else. Let's dive into the details. Bloomberg's Angelina Rascouet in Paris joins us this morning. Angelina, break it down for us.
Hi there. Yes, indeed. So L'Oreal came out with overall disappointed second quarter results. It was a miss overall, and they missed on all the units except for the luxury division. In particular, they missed for the dermatological unit, which includes brands such as Vichy, La Roche-Posay, or CeraVe. You know, this is a unit that's really led the growth of the past few years since COVID, pretty much, when people started really taking care of their skin. You know, if you think about all those beauty skincare routines that people are seeing on social media. But right now, that seems to be still growing double digits, but not as much as the market would have expected. But mostly North Asia, which includes China, is still down. This is the fourth consecutive quarter of negative revenue, and there were hopes it would be improving, but so far it doesn't sound like the Chinese market is going to recover. You know, basically over there you have a challenging consumer situation, worries about the property market, about youth unemployment, so that's all weighing on consumption.
Yes, really interesting stories then coming through in the L'Oreal numbers. Not necessarily a surprise about what's going on in China, but maybe the fact that dermatology is at the forefront of that trend maybe is more of a surprise than Angelina. What do we know about, thinking about China, we know a lot about the negatives, the companies that have been suffering as a result of weaker Chinese demand. That is not the story, though. Prada, a very positive set of results there. What can we see there?
Yes, indeed. Prada has been really an outperformer in the luxury space compared to other if you think about Gucci, or even if you think about LVMH. In the second quarter, LVMH posted results that disappointed the markets. Prada, it's Prada, but it's also Miu Miu. And Miu Miu has been on a tear. It's the smaller sister brand. Right now, it represents just under a quarter of total revenue. And, it really appeals to the Gen Z. And it's got some brand ambassadors, when attending their shows that that are really appealing to younger generations. If you think about Sydney Sweeney, and so basically, Prada did really well. They are seeing strong results out of Japan, and that's pretty much led by tourism flows. Japan right now, you have a weak yen. Chinese are doing their purchases there. So overall, Prada really good, strong set of results, and their shares are I think they're up more than 20% year to date. So that's good there.
Angelina, thank you very much. Bloomberg's Angelina Rascouet with the latest on the earnings stories coming through from luxury and consumer goods companies. Coming up on the program, we will be sticking with the French theme. We were talking about L'Oreal. We'll get to the aviation story, though. Airbus gaining after a profit beat, but it's reviewing its ailing space business. Details next. This is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
DOJ or other authorities
could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture,
covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back to the opening trade. We're about 40 minutes into today's session. You are seeing green on the screen across the board. Your heavyweights from ASML all the way to Novo Nordisk are actually moving this index much, much higher. But let's talk about what the downside is. Some of the movers that are moving to the downside. And of course, a lot of that is coming out of Spain, of all places. BBVA, for example, reporting earnings. Telefonica as well, reporting earnings this morning. Both are actually moving down. And now we're getting headlines here that the Madrid Stock Exchange is working on some data dissemination issues. It looks like, Anna, they're having a couple of problems when it comes to that market data, but we'll keep you apprised of what the connection is or where that's coming from.
Right, yeah, so whilst we're talking about what's going on in Spain, also worth mentioning that the Swiss stock pricing data is not updating. So these headlines just dropping across the Bloomberg right now. We'll continue to monitor those. Let's go to where we can get some pricing, and that is on the CAC 40 and the shares around Airbus. Shares in Airbus are soaring. That's despite the plane maker initiating a wholesale review of its ailing space business. The Airbus CEO, Guillaume Faury, says he's weighing all possibilities about the future of the subsidiary, that's a hard word to read sometimes, after it racked up close to $1 billion in charges in the first half.
We have underestimated the risk that we have embarked when we signed the contract or when we launched the programs. So we have had to record charges in our space program earlier this year. Actually, we informed the market in June of our challenges, and that's where we are in space. So we have launched a turnaround of the programs.
That's where they are in space. That's Guillaume Faury, the CEO of Airbus. Let's bring in Bloomberg's Sid Phillip, who analyses the sector for us, watches the sector for us. Sid, what stands out to you here? Because we've got a business taking a huge charge on the space sector, saying they're reviewing options. There were the numbers, of course, from the rest of the business. The stock goes higher. What's the takeaway?
Yeah, so at the moment, I think the analysts, as we saw a couple of analyst notes this morning, and all of them were sort of talking about how the results were better than expected. And that's sort of been a positive momentum for the stock. I mean, Airbus has, at the moment, is still delivering aircraft. They have struggled with supply chain issues on their commercial aircraft deliveries, and they've cut their annual forecast to annual delivery forecast to 770 from 800. So they've cut their they sort of expect fewer planes to be delivered. At the same time, some analysts are talking about how the pricing mix is better, and so they're actually able to get better prices on their aircraft, and that sort of helped them in terms of profitability and in terms of beating the estimates on EBIT and cash flow.
Well, the shares, to your point, rallying off that to the tune of about 5%. To what extent is it a precursor to Boeing, though? We put them both in the same category, but obviously two very different stories.
Yeah, absolutely. I mean, Boeing's a completely different story. I mean, ever since January, they've been sort of on a mission to try and control their quality and try and sort of get a fix on getting aircraft and production back up to sort of where they need to be They're also sort of looking for a new CEO ever since Dave Calhoun, the current CEO, said he was going to step down at the end of the year. And so there is a lot of challenges at Boeing, and we're sort of waiting to see any sort of indications on what Boeing will do in terms of the next CEO, in terms of how they sort of plan to address their cash flow issues. I mean, Boeing is expected to burn through about $8 billion in cash in the first half of the year. And so it will be interesting to see how they sort of go into the second half, ramp up deliveries, get cash back on track, and look for CEOs.
Another supplier to the aviation and the wider aerospace industry, Safran, the CEO talking about the availability of engines there and, the delivery schedule for those in the second half. We've got so many parts of this industry still reeling, it seems, from the post-pandemic supply chain disorder. What was the latest out of Safran then, Sid?
Yeah, and so the biggest problem for Safran has been sort of getting production back up from the pandemic. And that's the sort of industry story across sort of suppliers, across parts, and that's where Airbus is really struggling in terms of getting a supply chain back on track. So Safran is talking about how they're able to get production going again. They're trying to get the output of their engines, which they make in a joint venture with General Electric called CFM, and that's been one of the big sticking points for Airbus in terms of deliveries and how they can actually get those deliveries back on track. And so they're talking about how they're going to try and raise production of those CFM engines in the second half of the year. They're also talking about how they're improving landing gears and other parts, and they expect supplies to start getting back to better, but not quite normal until next year.
It's an interesting one, Sid. We thank you so much for walking us through that story from Airbus to Safran to, of course, Boeing as well. And we also know that when it comes to the demand story for a lot of the airlines, we're keeping a very close eye on what happens in the Middle East as well and how that affects not only the airlines but other sectors as well. And I want to go there next when it comes to an update out of that region. Hamas says an Israeli airstrike in Iran has killed political leader Ismail Haniyeh. He was in Tehran for the inauguration of Iran's new president. Now, this comes after Israel said it killed a senior Hezbollah commander with an airstrike on Beirut in retaliation for Saturday's Golan Heights attack. Let's bring in our Horizons Middle East and Africa anchor, Jumana Bersachi, all over this story. Jumana, bring us the latest.
Yeah, Kriti, a lot of developments in the Middle East the last 24 hours, but mainly a couple of hours ago, Hamas put out a statement saying that Israel had killed its senior political leader, Ismail Haniyeh, in an airstrike that happened at around 2 a.m. local time in Tehran overnight. Now, it's important to note here that there haven't been any official commentary or reports out of Israel yet, but the fact that it happened on Iranian soil is perceived to be quite escalatory. The reason Ismail Haniyeh was there is because the new President Pezeshkian, was being inaugurated yesterday. So he was there to attend the inauguration ceremony. There are actually pictures of him embracing President Pezeshkian from yesterday. And of course, today, it is a totally different picture for the region and for Iran. There is a lot at stake for the Iranian president, especially given as he has been painted as a reformist president who wanted to reopen diplomatic ties with the West. This raises a lot of questions about whether he will be able to.
Yes, and Israel, I think, not commenting yet on, not saying, not confirming that this was their activity. But to your point about how he was killed in Iran, what kind of stage does that set for further developments here then, Jumana? What kind of response could there be to this, given that he was killed, as you say, in Iran?
Yeah, so the IRGC state-owned media have said that they're launching an investigation into the assassination. They will be releasing details in the next half an hour or so. But what they are confirming is that the airstrike did take place at 2 a.m. in the morning. Not only was Ismail Haniyeh killed, but his bodyguard was also killed in the attack as well. And just a short while ago, we actually did hear from the new president on his first day on the job saying, "We will defend our territorial integrity. Iran will make terrorists regret their actions." So strong fighting words coming out from the Iranian president. This alongside other comments from the region as well. Turkey put out a statement saying that they condemn the killing of the Hamas leader. Qatar, a key mediator with these ceasefire discussions, also saying that they condemn in the strongest terms the assassination of the head of Hamas. So a very sensitive, politically sensitive time in the region. We haven't had any official comments yet out of the U.S.
And Jumana, walk us through the market reaction here, because of course you are seeing oil a little bit higher, but when you put that to the broader context of some of the geopolitical risk we see, it's really only a one standard deviation move. Are we expecting more moves in the commodity space off this news?
Yeah, people often tend to look at oil as a sort of a release valve for geopolitical tension in the region. And certainly up until today, most of the geopolitical developments in the region had been shrugged off by oil, and they're pointing to the weakness of demand coming out of China, the fact that looking out into the second half of the year, the technicals are not so supportive. And yet, in the last 24 hours, what we are seeing is a bit of a bid emerge for oil. One thing that I do want to mention, though, is that Iranian oil production has actually been on the up in the last year. There's been more supply hitting the market because of an easing of sanctions from the U.S. So if this has the ability to escalate further in the region, and if the U.S. really wanted to come down heavy-handed on Iran, then they could think of perhaps introducing new sanctions or tightening up existing sanctions, which would have implications on Iranian oil supply, which is why we are seeing a bit of an impact on the oil market today. But for the most part, the last 6 months, oil has been shrugging off a lot of the geopolitical tensions in the region. One other area you need to watch, though, is what's been happening with Israeli assets, because for the most part of this month, the Israeli shekel, local bonds, dollar-denominated Israeli bonds had been doing quite well on anticipations of a Gaza ceasefire deal actually getting across the line. In the last few days, since the Golan Heights attack, what we've seen is some of that outperformance has come off, namely because, once again, people in the region are concerned about next steps and what happens.
Jumana, thank you very much. Jumana Besetcha with the latest on geopolitical developments in the Middle East and the impact that that is having on various assets. She talked there about oil and FX markets, so we'll leave that one there. Thinking about things that are moving this morning, we have had some movement now in the yen, Kriti, which is definitely of interest, given when we started this program 2 hours ago, we'd heard from the BOJ, we'd heard that they were increasing interest rates and reining back on the bond buying program, and we hadn't seen it, well, we'd seen volatility in the yen, but overall, net-net, it had settled pretty much unchanged. Now we're seeing the yen extending its gains against the dollar to advance by 1%. So finally, perhaps some of that hawkish messaging maybe getting through to markets?
Yeah, it's an interesting one because there was that believability issue that Mark Cudmore was highlighting earlier, that yes, Governor Ueda wants to be very hawkish, to your point, but is the market buying it, quite literally buying it? And it seems like, to your point, that it actually is. But a 151 handle is interesting because given they're still dealing with the capital flow story, and since we heard from Governor Ueda, we also got lines from the finance minister, Suzuki, as well, out of Japan, really talking about the fact that they're basically endorsing and pushing forward Governor Ueda's plan on the rate hike. And this is significant because in previous iterations of this, there has been some tension between what you've seen on the fiscal policy and the monetary policy out of Japan. So this is perhaps a good sign on that unity front.
And I wonder how much, this is strengthening the yen then this morning, and the weakness in the yen had been mentioned a couple of times by Governor Ueda. And so I wonder if the market is increasingly seeing that as something that is in the BOJ's sights. He said earlier on today that the weak yen is pushing up prices, and that's a key risk. He saw the weak yen as a risk for rising inflation. So on a couple of occasions, mentioning that link between the weakness in the yen and what that can do to inflation. So not wanting to see too much weak yen, it would seem. So that's where we are on the BOJ conversation, moving our way towards the Fed, of course, that's coming up. In the meantime, plenty of individual stock names to keep an eye on. We got a really nice update from Tom McKenzie earlier on around ASML. We've got this Reuters report that suggests there's some rethinking going on from the US administration about to what degree some of their Western allies, the businesses housed in these Western allies, will be caught up in chip restrictions to China. And that seems to be still fast moving, a Reuters report, as we say, but ASML certainly responding positively to that news in the short term.
They certainly are, and this is an interesting one as well. And when we talk about ASML in the face of some of that tech story, that's going to be crucial, specifically when we're talking about not only ASML and kind of digesting perhaps the read-through from the sluggish Microsoft earnings, which geopolitics seems to be taking over. You also have NVIDIA, for example, that recently got approval for a chip that they can actually export to China. So I'm curious how much of the read-through follows from Europe into the U.S. session.
Quick check on what's going on in the banking sector then, because we heard from HSBC today, and that stock doing well on the back of a $3 billion buyback. We heard from our colleague in the finance team saying that was a little ahead of market estimates. So the stock up by 2.8% now on its London listing. The second quarter pre-tax profit better than expected. Really outlining as well the way that the business can try to diversify its income sources. So it's not so reliant on net interest margin as rates are expected to come down. That's the sort of latest conversation there. But BBVA also in focus when it comes to the banking sector.
It very much is. And for HSBC, you mentioned that buyback story. I'm having a little bit of deja vu from the Standard Chartered story just 24 hours hours ago. BBVA has a very different one because, look, their net trading income did actually beat. Their numbers are looking fairly solid, and yet the stock is down. It's not just down 2.3%. It's actually down as one of your biggest index weights on the stock 600. And the reason I bring this up is because there's a couple of reasons why this could happen. They're also talking about their banking bid for Banco Sabadell is actually on track. So Tom Metcalf, in that same conversation with HSBC, actually highlighting that maybe there's a little bit of a believability factor here in that's showing up in the shares, that this deal could actually go through. Bloomberg Intelligence, on the other hand, actually saying, well, yes, there was a net trading beat, but if you look at where that beat is coming from, it's actually some of the low-quality stakes that they have. So net, you are seeing BBVA shares down about 2.3% and weighing on the stock 600.
At the other side, end of the spectrum, Adidas is higher this morning, up by 1.4%. They're regaining momentum, it seems, with retailers on that Samba boom. Maybe that's where Guy Johnson is.
I was going to say.
He's busy stocking up on new footwear. Retail partners embracing this German brand. Again, and that's a boost to the relatively new CEO, of course. And this is a business still trying to turn the page, trying to reduce their reliance on the Yeezy brand, which had driven profits so substantially in recent years.
It's such a fascinating story that Adidas is actually going against the grain in the consumer story right now, because we were talking about L'Oreal earlier and their kind of sluggish growth globally, even though they had a little bit of strength in Europe. The conversation has luxury, not that I would put Adidas and luxury in the same category, but as a consumer, you are seeing the consumer kind of falling apart a little bit.
Yes.
Adidas bucking the trend.
Really interesting little nugget coming through from L'Oreal just in the last few minutes, actually talking about where is this weakness in dermatology, because Angelina Roscuret in Paris was telling us about this earlier, and I was thinking, but you know, dermatology was supposed to be this big boom business. It seems it was sunscreen that's been the weak area for this business, and so, you know, you just have to look outside. I mean, it's sunny today, sunny this week, but it hasn't been for very long.
The Sambas and skincare and a little bit of airlines, this really does feel like it should be Guy Johnson's best day. So there's plenty going on the earnings front. There's plenty going on the individual stocks front. Let's talk about some of the macro data we've got our eye on as well. At 10 a.m. UK time, we've got that Euro area CPI. Again, that divergence between strength you're seeing in the periphery versus weakness in Germany is going to show up not just in the GDP data, but in the auction data as well. 7-year auction, about 3 billion euros, going to be hitting the tape at about 10:30 a.m. UK time. And then it comes right back to the earnings story, Anna, in the States. Boeing earnings pre-market in the U.S. session, Meta after, and then, of course, the big Fed rate decision at 7 p.m.
Absolutely.
UK time.
So with Meta, we're going to be looking for that, you know, that battle with TikTok as that continues. I was looking at some of the news flow there surrounding their chatbots on Instagram. That could be of interest tomorrow. But maybe we leave the last word with the Fed, because there, what we're looking for is, has the Fed got that greater confidence it needs in terms of having done the hard work on inflation, bringing it down? Do they feel comfortable to confirm to markets that they're ready to cut in September, or is it all about options open, keeping all of those options on the table?
Yeah, it's a really interesting one. And we're going to, of course, see how this market reaction shares, because as we speak about the Fed, as we speak about the BOJ, basically digesting everything we have, dollar yen still at 150. And I should mention, we talked a lot about the earnings story. Schneider Electric is one of your underperformers as well. We're actually going to get more of that later this morning. Peter Herwick, the CEO of Schneider Electric, joins the Pulse in the next hour. Stick with us. This is Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Well, the hawks land in Japan as BOJ hikes interest rates and unveils plans to cut bond buying, while Governor Ueda says 0.5% is not considered a rate limit. Now, ASML rallies after reports that the U.S. plans to exempt chip makers from Japan, the Netherlands, and South Korea from upcoming export curbs. Plus, Hamas says Israel has killed its political leader in Iran. We'll bring you the latest as tensions rise across the region. Now, first thing is first, so let's take a look at the European markets map. Now, if you look at global equities, they definitely rallied. Again, this is on the back of the Bank of Japan kicking off a pretty crucial day by raising its benchmark interest rate to the highest since 2008. The other story, which is also playing out across European stocks, where you can see the FTSE gaining some 1.2%, the CAC 40 similar gains, the DAX 0.7% higher, is what we're seeing in tech stocks. So tech stocks are rebounding on a couple of reasons. First of all, they rallied after these reports that the U.S. president's administration plans to exempt manufacturers not only from Japan, but also South Korea and the Netherlands for some of these upcoming restrictions on China. So technology stocks, one of the biggest gainers here in Europe on the back of that chip making. Of course, bounced 3.2% higher. Look out for Brent crude, 79.87 because of all the tensions in the Middle East. And then we look at S&P futures gaining some 0.8%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the yen has extended gains after the BOJ's interest rate hike and announcement of a reduction in bond purchases. Well, joining us now is Grace Peters, Global Head of Investment Strategy at JP Morgan Private Bank. Grace, thanks for joining us. I feel like we have it all today. It's the chip makers. It's what's happening with the BO Japan. I mean, we've been waiting for that hike for quite some time.
Yes.
And then we're expecting maybe news from the Fed. I mean, is it a feel-good factor just because the BOJ was able to finally raise interest rates?
I think, to me, it fits under the umbrella of normalization. And whether that's coming from the BOJ or what we hear from the Fed later, the theme of normalization, I think, is one of the key themes that we need to see to continue supporting equity markets as well as risk assets more broadly. So I do think broadly encouraging. And when we think about the most recent data sets that we've had globally, you know, the narrative around slowing but still resilient growth driven by the consumer, household consumer balances, balance sheets and corporate balance sheets, and what we're hearing out of earnings season so far is broadly supporting that narrative, but obviously with some geographic diversion.
We had a big correction last week, and I don't know whether we're going to see those bouts or like those days of is it panic or just reflection?
I don't think it's panic. I mean, actually, if anything, the correction that we've seen is entirely normal and healthy. What was abnormal was until we hit this volatility in July, we'd gone for 356 trading days without a 2% drawdown. And when you look back over the last 30 years or so, volatility, intra-year volatility in markets is normal. Typically, you get about a 13% pullback. So I don't sense there's any degree of panic. I mean, we obviously must guard against complacency. When we think, you know, as money managers about the key risks out there, geopolitics, politics, politics and complacency are three that we commonly think about. So I think a pause is healthy. In terms of equity markets specifically, for our year-end targets for the S&P through the end of the year, we're sort of range-bound. But when you look over the next 12 months, we still think there's 6-7% upside, so healthy growth driven by corporate profits, and we will certainly be watching this earnings season closely.
Grace, you mentioned normalization. Is there a worry that actually inflation spikes back up? We're seeing huge tensions in the Middle East. There are many questions about tariffs and this, America first and dollar strength policy that we could see, or dollar weakening policy that we could see from the US.
I think for the Fed and for the central banks at large, you're still tying with both downside risk to growth and upside risks to inflation. They are two tail risks that we absolutely must not get complacent about. With regards to the upside risk to inflation, I mean, yes, geopolitics is certainly one angle. We also have got, obviously, a big event coming up in the US election coming through the autumn. And depending on who ends up in the White House, some of those policies could also end up being inflationary. So when we think about that in the context of the portfolio, some of the assets to build portfolio resilience that we're having conversations with clients about are ones that would actively benefit from some of this inflation and certainly provide a buffer in portfolios, and they would include assets like infrastructure and gold.
Grace, the other one, BOE tomorrow. It's exciting because we haven't heard from them because of election for quite some time. What are you expecting?
Yes. Well, I think we are expecting the first cut from the BOE when it comes to August. Certainly the data in the UK has been at the margin weakening. When we look at retail sales, we look at the housing data, we are seeing, still positive growth, we think, but on a weakening trajectory. So we do think that paves the way for an August cut from the BOE. That in turn should support risk assets to some extent, and actually whilst we've generally had a preference in the UK market for exporters from the UK, actually with the new government, with the rate cut, you could start to see UK domestic businesses faring a little bit better, supported by positive. Small cap to some extent, yes, more 250 I'd say. I think rates are still high, and when we look at the anticipated trajectory of rate cuts over the next 2 years, it's still higher than we've seen in the past. So indebted companies I still feel should be avoided, that would generally push us up to a mid and large cap rather than too much in the small cap space.
Grace, let's also speak about tech, but we'll get back to Grace Peters from JP Morgan Private Bank. Let's also be joined by our resident expert in all things media and tech. Shares in ASML and other Dutch chip-making equipment are gaining this morning after Reuters reported that the U.S. planned to exempt chip tool vendors from Japan, the Netherlands, and South Korea from upcoming export restrictions. So let's bring in our Tom McKenzie. Tom, I mean, we're seeing quite a bounce in technology. I think the European technology stocks are up 3.5% on the back of it.
Yeah, really big moves on the back of this report. Again, from Reuters, as you rightly say, that the US is looking at potentially carving out the Netherlands, Japan and South Korea from these very rigid restrictions that they hope to be putting in place in about a month's time that would constrain the ability of these companies to ship equipment into the Chinese market, to key semiconductor makers, and particularly any company that produces equipment that has any US software or hardware. Now, what Reuters is reporting suggests that Taiwan and Malaysia are not excluded. So you're seeing big moves in Japanese companies. You're seeing big moves, of course, in ASML, listed in the Netherlands, because they ship these extreme ultraviolet lithography machines into the Chinese market. Now, the caveat to that is that these companies are still going to face restrictions. The idea that ASML can freely send kit into China is just not correct right now, and that's not going to change anytime soon. But it's the most high-end tech that ASML puts into the Chinese market. They are not doing that right now, but it's about whether further down the portfolio, whether they are now more restricted, or in fact, if they have a bit of breathing room. Interestingly, JP Morgan's analysts say this could be about setting up a negotiation between the US and their key allies, Japan, South Korea, and the Netherlands, around how they put in place these restrictions in terms of this foreign direct product rule that it looks like the Biden administration are looking at putting in place. But for now, some relief from investors in those companies that it seems are priced in the worst in terms of these restrictions.
As if by magic, we also have a JP Morgan analyst and one of probably the authors of that. But very quickly, Microsoft, what did we learn from earnings from Microsoft and Samsung?
So two key things from Microsoft. One is that the cloud growth was less strong than many analysts expected. So that came came in the quarter, 29% growth. That's down from the previous quarter. The other key line is the spend on CapEx. You know, Francine, there's been a lot of scrutiny of these companies in terms of how much they're spending on the data centers, on the servers, on the build-out around AI, and that increased and quite substantially. It came in above the estimates. So if you strip out the licenses that they pay in terms of the data centers, you're looking at close to $14 billion in terms of CapEx spend, up from $11 billion. If you include the fees that they pay to license some of these servers, data centers, then it's actually $19 billion. And the CFO executives at Microsoft saying that spend is just going to increase because they're still seeing that demand. They still can't match the demand, they're saying, but it comes at that CapEx cost.
Thank you so much. Tom McKenzie there with the very latest on some of the earnings news and some of the big news that we had on chip makers. So, Grace, I mean, what do you make of, is it still an industry that's worth investing in, or it feels a little bit frothy or price perfection, as diplomats say?
So I'd still say that generative AI is going to be one of the key themes when we look over a multi-year time horizon, the other one being security and the changing nature of national security. What I would say is AI is so much more than just 6 or 7 companies. Yes, absolutely, they are key to the first phase. But as we look to the AI build-out, there are so many more industries across industrials, across energy sectors that are going to need to participate in the second derivative impact. So, you know, a bit of consolidation, as I said before, is healthy. I imagine this is going to be reasonably short-lived. But ultimately, we are encouraging our clients to broaden out their AI exposure. And we think that this is part of what's going on as well. Just 2 things that I'd add to Tom's comments. Firstly, I'd say when we think about, you know, some of those results overnight and some of the slowing cloud demand, some of that is to do with supply chains and the availability, exactly, of some of these critical, you know, sort of semiconductors, etc. And therefore, semiconductor equipment makers are only more important as part of that process. And then the second thing, and it's Bloomberg, one of Bloomberg's slogans, context is everything. When we come to the European, you know, earnings season, people are feeling much, you know, less confident about Europe, obviously with everything going on with the parliamentary elections, the slowing that we've seen in growth. Generally, expectations, the bar is lower for this region, and I think that actually sets Europe up reasonably well for some of our quality companies to perform.
But, Grace, if we have a completely different, I guess, world order, right? After the Second World War, it was all about the global economy, working together, trying to get GDP up. If now we're putting national security above economic growth, is that being priced in? Because you're going to see different trading blocks, and that could change every, you know, year or so.
Yes, I think there are parts of this that are absolutely not priced in. And when we think about, you know, the macro impacts, it was what we mentioned before, the most direct macro impact is higher inflation as non-economic CapEx is being spent for these broader national security needs. But there will be beneficiaries of that CapEx, and they are often in cyclical sectors or sectors that have traditionally been cyclical, but now will become more focused on structural growth. And I think industrials are a big part of that. Some parts of the commodity complex will also be part of that. And actually, when you add that to a portfolio, whether it be in public or private markets, particularly in the public side, you actually get a broadening of your equity exposure by geography and by sector that I think is going to be very complementary and fits with this current rotation theme as well.
But Grace, so does AI also change? I mean, it changes the whole economics. You know, we're probably going to be 20% more productive. It's probably deflationary. I haven't really seen a true model of that. But does it also change the equity market depending on early adoption or not?
I think so. The key thing for me is that margin sustainability is more likely. You know, we see US margins in particular at all-time highs, and some would see that as a vulnerability, whereas I would see it more as an indication of the fact that companies have done a fantastic job at passing inflation on, demonstrating pricing power. Yes, some of that might wane, but I think AI will be a key factor in helping companies continue to, you know, generate a high return on invested capital, keep their margins high, and thus earnings growth. You know, the icing on the cake to this soft landing that we foresee is that it is prolonged, that you actually see GDP, trend GDP, move up over the next decade to above 2% in the US. And that obviously should also support a higher degree of earnings growth going forwards on a multi-year basis. We still have demographics like aging that also are pushing down GDP, but I think on balance, generative AI could be constructive for productivity, for growth, and thus for large cap corporates with those strong balance sheets to invest.
Yeah, and aging is especially hard here in Europe. Thank you so much, Grace Peters, Global Head of Investment Strategy at JP Morgan Private Bank. Now, we're just getting a little bit of breaking news. The SIX Swiss exchange says that trading has been halted due to technical issues. So we'll keep an eye on that. For the moment, we understand that not all of the Swiss markets are open, so be careful if you're trading anything right now. Coming up, our exclusive interview with the Air France KLM Chief Executive Officer Ben Smith. We'll discuss the carrier's sponsorship of the Paris Olympics, its new luxury lounge, and the turbulent trajectory ahead for airlines. That's up next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Well, Air France has launched an exclusive new lounge at Charles de Gaulle Airport in Paris in an effort to reward its highest-paying passengers. Now, the carrier is hoping its millions invested will pay off as airlines wrestle with mixed forecasts. Now, for more, we're joined from the lounge by the Air France KLM Chief Executive Officer, Ben Smith. Ben, thank you so much for joining us. Now, it is quite incredible to look at some of the airport lounges really being renovated, but also some of the luxury hotel rooms at Charles de Gaulle. What's the strategy there?
So La Première for Air France, we call first class here La Première. Dates, this is our top line service. We've been historically we've been able to produce a luxury service, luxury product, second to none in Europe, across the Atlantic, and many other parts of the world. As you may know, Air France is one of the two airlines that flew the Concorde. The luxury leisure market is very, very healthy and strong here in France, and we've upped the product offering that we have with this new ground service that we've got at Charles de Gaulle Airport here in Paris.
So interesting. So, Ben, what trends are you seeing in August in terms of demand for Paris air travel? I know there's a shortfall because of the Olympics, but has there been a pickup in recent days after the start of the Olympics?
So we already, I guess a couple months ago, started seeing trends decrease in corporate demand, both inbound and outbound, from Paris and from France during the Olympics. We already forecasted that a year ago, but we were not expecting the decrease that we did experience. So we did release advanced information on that. But what we're seeing now, the trends are moving back to what we've experienced over the last few years. So, more regular levels of demand for both business traffic and high-end leisure. So that's giving us a little bit more comfort for the rest of the year.
So I know costs have also been top of mind, and one of the challenges that the group has been facing. How easy or difficult has it been to negotiate with French unions this year in the run-up to the Olympics, especially given all of the political turmoil that we're seeing in France right now?
Well, we've been developing very, very strong relationships with our 17 unions here at Air France, and very happy and proud to say we have not had a labor disruption in 6 years, which is very new for Air France. We've had relative labor stability. And if you look at all the other transportation companies in France, the majority of them have had big social unrest, which has resulted in a lot of passenger or customer inconvenience. So up until today, and based on the relationships we have, we hope to keep that stability in place for the long-term future.
You're expecting, there has been disruption because of traffic control and things like that in France. Are you expecting things to stabilize?
Well, we haven't at Charles de Gaulle. We've been relatively we haven't been impacted by that even through over the last couple of years. So we expect that to stay in place, that relative calm. I mean, this airport is it was not designed for a hub structure, but for our own origin destination traffic and our premium offering. What we're putting in place, like this new lounge, is really fantastic. I mean, if you're starting or terminating your journey here in Paris, it's completely exclusive. It's like a private jet experience. We have a Michelin star chef who runs our restaurant. You are completely outside of the public area for security, for passport control. We drive you to and from, your flight in a Porsche. And really, it's from what what our new customers or customers who are newly experiencing this, the feedback is absolutely amazing.
Yeah. But are you concerned at all about the reliance on these premium leisure passengers in the absence of business travel?
Well, historically, even before the Olympics, Air France, the premium cabins, La Première, was made up of 50% leisure. Paris is not London in terms of corporate traffic. So we are seeing our corporate traffic come back. I mean, a short two-month hiatus, but we expect that to come back. And leisure is very strong. And I think the Olympics is really helping us better position the country, better position better to position France as a great destination. I don't know if you watched the opening ceremonies, but it was just like a fantastic ad for Paris.
Everyone watched
France
it.
is already the number one. France is already the number one inbound market. So this is why we're investing in this. We believe in this product. It is profitable for us. There is no U.S. carrier that offers first class.
I'm going to say I was one of the few that really enjoyed it. But does Air France have enough planes for replacements of its old fleet, like the A321s? And there has been significant delays from some of the manufacturers. Does that make you rethink your plans going forward?
No, we're okay on the fleet front as of today. We don't have. We have a couple 787s that are left to be delivered at KLM. But at Air France, we've got a sizable order of Airbus A350s, which will be delivered through the end of the decade, and those are coming in pretty much on time. And on the medium-haul fleet, we have a sizable fleet of Airbus A220s and Airbus A320, 321neos, and those are pretty much on time. So we're not too concerned about having the right amount of capacity, and we do have quite a bit of flexibility in our existing airplanes and older generation. If we do have delays, we'll be able to maintain the capacity.
In terms of ticket prices, do you think there's a structural shift in ticket prices going lower because the revenge spending on travel slows down post-pandemic? I know Lufthansa has been, for example, talking about yields being under pressure, especially on Asian routes.
Look, we're not heavily dependent on Asia. It is an important market for us, But with what's the most concerning for us are twofold. One, the fact that there is a Russian overflight ban for European carriers, so that makes travel to Europe, if you're flying on a European carrier, you're adding 2-3 hours. And on top of that, there are new taxes and charges which are going to be imposed on flights from Europe to these regions. So that's more. Those are the things that we're concerned about. But in terms of yields and how that's going to have an impact on us with what you call revenge travel, we don't see that to and from Asia being that big of a concern.
Do you see it elsewhere in other routes in Europe, for example?
In Europe, we're not a big player in continental Europe. Most of our European operation is to feed our long haul. The European market is dominated by low-cost carriers. They have the bulk of the market. Okay. We do have our low-cost carrier who's based at Orly Airport, and we are expanding there, and that's working out quite well. We're the biggest airline in Paris. We historically have not had a big low-cost operation, so really it's organic growth for us at Orly. We see that being positive.
Okay, so interesting. Ben, thank you so much, and congratulations on, of course, the Olympics, but also congratulations on that lounge, La Première, that you've just opened. The Air France KLM Chief Executive Officer there, Ben Smith. Now, let's also look at some of the market movers, but let's focus on some of the corporates. So ASML leading this worldwide rally in semiconductor stocks after Reuters reported that the Biden administration planned to exempt chip equipment makers in Japan, the Netherlands, and South Korea from upcoming exports restrictions. Now, the other stock we're watching is Airbus. Those shares rising after the airplane manufacturer reported better than expected results from the second quarter. HSBC also announcing a $3 billion share buyback after the lender reported earnings that beat expectations. Siemens Healthcare, well, they reported adjusted EBIT and revenue for the third quarter that actually missed market expectations. So you can see a little bit of pressure on, for example, that stock down 7.2%. Coming up, we talk geopolitics. Hamas says Israel has killed its political leader, Ismail Haniyeh, in an airstrike in Iran. We get the latest from the Middle East next, and this is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The hawks land in Japan as the BOJ hikes interest rates and unveils plans to cut bond buying, while Governor Ueda says 0.5% is not considered a rate limit. ASML rallies after reports that the U.S. plans to exempt chip makers from Japan, the Netherlands, and South Korea from upcoming export curbs. Plus, Hamas says Israel has killed its political leader in Iran. We'll bring you the latest as tensions rise across the region. So on to the Middle East, and Iran's supreme leader has vowed severe punishment for Israel after Hamas says its political leader, Ismail Haniyeh, was killed by an Israeli strike in Tehran overnight. Now, for more, let's bring Horizon Middle East and Africa anchor Jumana Versace. Jumana, this escalates things. How worried is it that actually, first of all, what do we know happened, and how significant is a figure is Haniyeh?
Yeah, good morning, Fran. Well, we walked in this morning with news out of Hamas that Israel had targeted the political leader Ismail Haniyeh in an airstrike in Tehran overnight. It happened at around 2 a.m. local time. Iranian state TV reporting that not just Ismail Haniyeh, but his bodyguard was killed alongside him. And of course, it is notable that Ismail Haniyeh was in Tehran to begin with. He was there for the inauguration of the new Iranian President Pezeshkian, who had his inauguration ceremony yesterday. So today is his first day on the job. Important to note here that we haven't had an official comment yet from Israel themselves, even though Hamas are pointing to Israel being behind this attack. However, his death will be seen as a major victory for the Prime Minister Netanyahu, given some of the domestic turmoil he's been facing recently, the splits within the coalition. But they have been consistently saying that they want to go after the leaders of Hamas since October 7th. So this will be seen as somewhat a victory. Also bear in mind, Francine, that Ismail Haniyeh was one of the chief negotiators for the ceasefire discussions. So it does raise questions about the future of those ceasefire discussions.
Yeah, are we potentially bracing for more violence, and how big could the escalation be?
Well, just in the last hour, I think it is pretty notable that we got some comments from the supreme leader of Iran, the Ayatollah Khamenei, and he is saying severe punishment awaits Israel. That is a quote, vowing harsh punishments. We even heard from President Pezeshkian himself, his first day on the job. He's saying, we will defend our territorial integrity. Iran will make terrorists regret their actions. So they are not taking kindly to the fact that this airstrike happened on Iranian soil. The background here is that the president, Pezeshkian, actually campaigned on a platform of being a reformist and looking to open up diplomatic channels once again with the West, with the view of eventually lifting some of the sanctions that have been burdening the Iranian economy. This, of course, changes everything. The rhetoric that's coming out of them is very harsh. And indeed, other leaders and other foreign ministers from around the region have waded in as well. Qatar, for example, another leading negotiator with those ceasefire discussions, condemning in the strongest terms the assassination of the head of Hamas. We're also hearing from the Jordanian foreign ministry saying that the assassination is a violation of international laws and an escalation that will lead to more tension and chaos in the region. So the region is on high alert.
It certainly is. Jumana, thank you so much. Jumana Bersace there covering the Middle East. Now, a new Bloomberg poll says Kamala Harris has wiped out Donald Trump's lead across 7 battleground states. This as the U.S. vice president rides a wave of enthusiasm amongst young, black, and Hispanic voters.
The momentum in this race is shifting. And there are signs that Donald Trump is feeling it. Well, Donald, I do hope you'll reconsider to meet me on the debate stage. If you've got something to say,
Well, let's get more on today's big take from Bloomberg's Chad Thomas. Chad, good morning. So what's the main takeaway from these swing state polls for Harris and Trump?
Hi, Francine. Well, the main thing is that the momentum that we're seeing with Harris, it is coming through in the polls and is coming through in polls in swing states, these states that will ultimately decide the election. And the big takeaway here is that Harris looks to have more paths to the presidency than Biden had before he dropped out of the race. Harris is now leading in Nevada and also in Arizona, and she's tied in Georgia. Those were states that were really slipping away for Biden, and it was looking like he had no chance in those particular states. And that's important as well because the Democrats have always talked about this blue wall. These are states, Francine, in the Midwest. It's Wisconsin, Michigan, and Pennsylvania. And those were states that they had to win if they couldn't pick up these states in the South. If you look at Pennsylvania, that is the one state where you really see that Trump is still in the lead. So what we see from these polls is that because Harris has more paths to the presidency, she could, in theory, lose Pennsylvania and still win the presidency. But of course, Pennsylvania is still a big target for both the Republicans and the Democrats.
And Chad, do we expect this bump for Harris to last?
Well, this is what you'll hear from political analysts and pollsters. She has a big bump at the moment that's likely to continue for a few weeks into her pick for VP and also through the Democratic Convention. That's pretty normal. They'll be looking at the polls after Labor Day. That, of course, is the official end of summer for the Americans, and that is when people really start to focus in on the presidential race. And so in September, you're probably going to have a better sense where are things starting to settle in the race for the presidency.
Chad, thank you so much, as always, for joining us. I mean, this is probably one of our most interesting stories today, so I urge everyone to also go on the Bloomberg website or the terminal and read it. Chad Thomas from Berlin. Now, coming up, Schneider Electric shares gaining this morning after they posted earnings. We'll speak to the chief executive, Peter Hervik, about the company's results. That's next, and this is Bloomberg.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
You're not living near the edge. You're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Schneider Electric is up this morning after boosting its full-year organic growth earnings forecast. Now, joining us to discuss the results is Peter Hervik, the Chief Executive of Schneider Electric. Peter, welcome to the studio, welcome to the Pulse, and thank you so much for joining us. First of all, there's a nice little boost when you look at your share price. I mean, what are you most looking forward to the second half of the year? Given what we've seen in the first half, what does it tell us about the shape of the economy right now?
So first of all, thank you very much, Francine, for having me here. You know, the first half, despite the numbers, was a proud moment for the company because we've been named by the Time magazine and Statista as the most sustainable company in the world. It's not the first time for us, but it's great. And it fuels also growth as we drive electrification and digitization. As we're looking into H2, you know, we've seen an acceleration from Q1 to Q2, and we anticipate that to continue. So 6 to 8% growth, and we've lifted the margin guidance for the year, so it's going to be good.
Peter, do you worry at all because of the legislative elections in France, which frankly show a very divided society, because of what's happening in the U.S., that the climate agenda, that the electrification agenda is taking a step back?
Listen, you know, we've been around for 180 plus years, and I always say, you know, we need to be successful despite what's happening in the short cycle political environment, and we're prepared through our multi-hub setup with you know, being able to develop, manufacture, and sell in 4 global hubs, Europe being one, then China, India, and the U.S., which represent our biggest markets. So we're prepared for what's coming, and I'm quite confident, respectively.
What do you worry about the most of what potentially could be coming? I don't know whether it's, you know, trade being redrawn, or whether it's something else?
Well, you know, of course, people like ourselves are always worried if there are really sudden changes on something. But I think we've prepared over the last couple of years, because trade barriers is nothing new totally. And I'm a big fan of not shipping R&D or shipping products across the globe. So we have setups in those big hubs, and the shipping in between has really minimized, and with it also barriers for us have minimized. We produce and develop in China for China, in India for India, in Europe for Europe, in the U.S. for and North America for North and South America.
But we're also seeing, I mean, governments under intense pressure, budgets under intense pressure. Again, will it take longer to green the economy because of the funds available for some of the governments?
So, you know, we continue to expect that spending is going to continue, maybe pending on how elections will go in North America, for example, or in the U.S. I think there is going to be a renaming of the IRA to something else, but I don't expect big budget cuts. We rarely see those from one administration to the other one. I think the European Green Deal is in deployment, and then you have the energy performance buildings Act coming in Europe, which will accelerate the rebuild of buildings, and we've prepared for that also with an acquisition that we announced today in the workplace management for buildings.
Are you expecting more acquisitions actually after this one? Just because you could see valuations attractive, you're sitting on cash, so go for it.
Well, we've said to the investors at our capital markets day just 6 months back that primary focus will be on organic development. We're attached to our credit rating, where we just gotten upgrades. We have had 14 years of progressive dividend. And then having a solid balance sheet allows us to be agile and opportunistic if something comes up that fits into the strategy.
Talk to me a little bit about AI and actually how that fits into your strategy and how it could revolutionize or significantly change your industry.
Yeah. So, first of all, there is a lot of talks about AI. And where is it deployed? It's deployed in data centers. We're the world market leader in furnishing electrical infrastructure to data centers, so medium voltage, low voltage, but also into the racks, cooling the building management system, driving energy demand down. So this is a very vibrant market at the moment. We see unprecedented demand at the moment in those areas, and we're using AI ourselves to improve our operations and build it into our products.
But so how much significantly does it change your operations? When we talk about productivity, is it deflationary? Does it really increase productivity or free, cap to do other things?
Yeah. So if we have roughly 195, precisely 195 projects going on internally to drive productivity, to drive growth, to drive customer satisfaction, and to best utilize the resources that we have. And if you look at our gross margin in H1, it's been historic at 43.4%. And of course, this comes also through the deployment of AI. And then we built it into our products to help our clients.
And are you waiting for new software from from the big ones, or you're doing it? Again, it's interesting to see how every chief executive sees this, because it could significantly change spending, but also, internal R&D.
Well, at the end of the day, we're using AI for a long period of time in our software company here in the city, Aviva, that has been grown fabulously, and it deploys AI. Of course, it does come with a cost, but there also needs to be a benefit. And at the end of the day, we're all business people. A cost cannot exceed benefits, but we see that to happen. So it's all good from a growth perspective, from a productivity perspective, and then also how we're driving customer satisfaction.
Peter, we touched a little bit on acquisitions and the fact of what you said 6 months ago about organic growth. But if you're not doing any big acquisitions, do you want to give back to shareholders? And how important is it in this kind of market environment that you're seeing through dividends or buybacks?
So we've committed to a progressive dividend with a rough payout of 50% of the earnings, and then I think it's good to have a low leverage that gives us opportunity if cases come up. I mean, a quarter ago, people were asking me about a software company called Bentley Systems, with whom we were in talks. We put the pencils down, and now we've acquired the majority in Planon, which is a workplace and asset management company that fits right into our strategy, and it's good to have firepower if the opportunity comes up. And then we're listening to what our shareholders have to say.
What's your take on the UK? There's a new government, so maybe there's more, an energized commitment to keep the balanced books.
So the UK is an important market for us in Europe. It's one of the top 3 markets that we have, and we're eagerly looking at how some of the transformations hopefully positively influence the environment. It's been a tough market in respect to inflation, and we hope that inflation is going to go down, and it will help businesses to grow, and people have more available spend.
Yeah, and we'll see the Bank of England is tomorrow. Peter, thank you so much for joining us here in the studio in London. That was Peter Herweg, the Chief Executive Officer of Schneider Electric. Now, coming up, HSBC shares are higher this morning after an earnings beat and the announcement of another $3 billion share buyback. We'll hear more from the outgoing Chief Executive, Noel Quinn. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep bringing the World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back, everyone. Now, HSBC making gains after reporting second quarter pre-tax profit of $8.9 billion, beating estimates. Well, Noel Quinn signed off his final quarter as chief executive by announcing a further return of $3 billion to shareholders.
We're retaining sufficient to drive growth, and we're distributing any excess because we've still got a very strong capital ratio, CET1 ratio. We're quite well above our target range. Therefore, we're able to both grow and distribute via buybacks.
Well, Bloomberg's Jenny Serene joins me now, who, of course, runs all of our finance coverage out of London. Jenny, I mean, there's so much going on. HSBC, it was quite, we've interviewed him so many times. This is it. He's like packing up and passing on the baton.
That's exactly right. Yeah. I mean, he said his first step is to rest, which after 37 years of working at a bank, I get. But yeah, he's off to greener pastures, as they say.
So what are the challenges? I mean, a new chief executive is coming up. This wasn't a bit, it was actually quite a good quarter, but what are the main challenges going forward?
Yeah, I mean, I do think, so one of the key ones is just the fact that they're kind of deepening that pivot over to Asia, really betting big on China still. And you've got two candidates over in the U.S., both Kamala Harris and Donald Trump, who are poised to be a lot more hawkish on China in the coming years. And so I think that's that very delicate geopolitical tension that he's going to have to navigate that I think will obviously dominate a lot of his decisions and a lot of what he has to work through. And then beyond that, you've got falling interest rates. And so obviously they've stuck around higher for longer up till now. But the bank has been doing a lot of work to kind of ready itself for that new era. And I think that's going to be a tricky one because you're really facing kind of that macro headwind, as it were.
Jane, what do you think the most significant story from HSBC was? So, of course, there's the buyback, but there's also the fact that they're planning to keep their bonus pool broadly flat. I don't know whether that's a sign of things to come for other European banks, or UK banks.
No, I mean I think it's a really good call out. So. Yeah, so for now, they said they're planning to keep that bonus pool flat, which is really surprising if you look at some of their key Wall Street businesses. They actually performed quite well during the quarter. So you had equities trading revenue that more than doubled compared to a year ago. You had investment banking up. You had FX trading up. But I think really what this points to is they're really trying to batten down the hatches, keep a lid on costs, keep expenses in check because they know interest rates are poised to fall. And so even though the Bank of England has held off so far, I think the market generally still does think that those rate cuts are coming. And this is a bank that really wants to be ready for that moment when it happens. So I think that's what they're trying to telegraph here. But I'm sure there's some bankers and traders that are not very happy inside of HSBC today.
Yeah, I'm sure. Jenny, I mean, apart from that and interest rates, do they worry more about the health of the consumer, which kind of relates back to that, or the fact that it's struggling, difficult to compete with the U.S., especially if there's more deregulation coming?
Yeah, no, I think that's another good one that really this new CEO will have to battle. So far, consumers have held up okay. So it's, I think, pretty surprising given what we've, what the economy has put them through in these past few years. But people are still keeping up with their bills. Their provisions were still, largely in pristine shape this quarter. And so I think, Barclays reports tomorrow. We're expecting to hear a lot more out of them on that. But yeah, so far, consumers have been able to keep up with their bills pretty good.
Jenny, thank you so much. Jenny Serene there with the very latest on HSBC. Now, Airbus shares also up today after the plane maker's earnings beat estimates. The company said it was booking a charge at its space unit. Now, that's forced the plane maker to cut costs amid lower than anticipated aircraft deliveries.
We have underestimated the risk that we have embarked when we signed the contract or when we launched the programs. So we have had to record charges in our space program earlier this year. Actually, we informed the market in June of our challenges, and that's where we are in space. So we have launched a turnaround of the programs.
Well, let's get more from Bloomberg's Benny Camel. Benny, good morning. So what do you make of the Airbus results?
Well, the numbers were fairly mixed, and it was interesting this time that we got a fair bit of intel on the space business. Most people obviously associate Airbus with the civil aircraft manufacturing and less with sort of space and defense, but that was really where the focus was this time round, and for all the wrong reasons. They had almost $1 billion in charges in that division, and we just heard from the CEO there. They had some contracts that didn't go the way they'd wanted to. They're still pouring through the numbers here. They've put a new management in place at that division, so that group is now looking at the operations and is thinking hard about how to turn that business around. It was interesting from Faury, the CEO, yesterday. We asked him, well, what are the options for this business? Does that include maybe even getting rid of it? And he said, all options are on the table at this point. We're really taking a deep dive into the operation. So this could go either way. It could go along the way of a fix. It could go along the way of improving the business via acquisitions or even a wholesale disposal.
So, Benny, first of all, you're looking very dapper. I mean, you're very Wimbledon ready. But what can we expect from Boeing?
Wimbledon ready, yes, and Boeing ready. That's later in the day, in a couple of hours. That will be a mixed bag, for want of a better word. We know that the first half has been truly difficult for Boeing after that blowout early in the year. We know that they're burning through a lot of cash. And so really people will be looking at what does the second half of the year bring? Can they stop the bleeding? Can things improve? And interestingly, who will oversee all of this? We still don't know who the new CEO will be. Dave Calhoun has said that he wants to step down. So maybe even today we will get some more on that. We might even get a name. And the question really will be, what kind of a turnaround can that person achieve?
Benny, thank you so much. Benedict Camel there with the very latest on Airbus and Boeing. Now, up next, Bloomberg Brief, Danny Berger and Manus Cranny in New York, and this is Bloomberg.
I decided to acquire Indeed 12 years ago. When I was 36, I couldn't speak English, but I decided to move to the US with my family. Okay, let's study English. Let's, manage this big, American company. But I could do it. Ages are just numbers. If you stay being very curious to run new things, you can keep doing that. So what we're trying to adjust is our company should be the place to maximize people's ability, people's talent, and people's passion, right? Our employees' passion. So we believe that if we can have the work or the vision, people can be passionate, and which is aligned with all what employee wants to do, that's the best way to maximize the people's ability.
Follow your passion.
That's right.
So whether you're 14 or 40 years old.
I think so. Because, what's the difference? I don't know. We might be totally wrong. That's how we have been running this company for 60 years.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from our global headquarters in New York. I'm Manus Krenny alongside Danny Berger. You welcome to Bloomberg Brief. Let's set that agenda.
The Bank of Japan hikes and plans to have bond purchases. Now we count down to the Fed. A turn in fortune, Microsoft takes a knock, but tech rallies on reports of a shift in chip export policy from the U.S. And Israel kills 2 enemies in 2 capitals with attacks in Beirut and Tehran. Hamas confirms Israel has killed its political leader. Manus.
Breaking news, Danny. This is on CPI. This is not what the Eurozone will want to hear. We've got Euro area consumer prices on the headline 2.6%. The estimate out there was for 2.5%. Of course, Germany speeded up. It was 2.6%. We know that. France was a little bit lighter. And on the core, 2.9%, Danny. The estimate was at 2.8%. But of course, we know the focus will be on the services CPI number.
Exactly. And to be clear, we are seeing little change in the markets, little change in euro movement, little change in the bonds. As you say, the consumer prices are unchanged and the services rising 4%. I know that's what you were talking about, Manus. It has been that service part of the economy that's been troubling for the ECB to get under control.
And that's exactly what Isabel Schnabel had been focusing on. There's your yields dropping this morning. We've got a veritable feast of markets to get through, from the Bank of Japan counting down to the Fed. This is what you have got in terms of the rest of the markets. You've got pretty violent swings going on in the equity market, from down 1.5% on the Nasdaq, turning it around. Let's have a look. Do we have the board there? Let's have a look at some of the global markets. This is what we've got for you. The Nasdaq turns it around. Look, this is on a couple of different things, Danny. I know you can sort of say, well, Morgan Stanley raised Nvidia to the top pick after a washout on the stock, but they say a lot of the problems have been done. What really is pushing the tech narrative is the foreign chip exports. We understand that the US will step back on its restrictions for Japan, Netherlands, and South Korea in terms of chips to China. Microsoft was pretty brutally attacked yesterday in the aftermarket because the cloud business, it grew, but not as much as the market wanted. To the Bank of Japan, there is your dollar yen. Nobody's fading this move. It sounds as if Ueda has gone a little bit more hawkish on the hike of 25 basis points and halved the QT. And indeed, there is no cap. 0.5% is not really a ceiling, and we count down to the Fed. What will they indicate, Danny, in terms of the proclivity to cut.
Yeah, we have the yen portion of the equation. We're still waiting for the dollar portion of the equation from the Fed. I thought it was remarkable that Ueda was hawkish. This is a central bank chief that after every single meeting of his, he's had 10 now, that the yen has weakened. This is the first time, his 11th meeting, that we've seen appreciation from the yen. Again, he is someone who likes to skew dovish, so the fact that he reiterated this idea that there will be subsequent rate hikes is a sea change for Ueda.
And also on the ceiling, he talks about the 0.5% as not really being a ceiling. HSBC say it was a slightly hawkish move on the forward guidance. Real rates are not significantly low levels. They will continue to rise. Well, let's take some of that thesis on the Bank of Japan, raising their rates by 25 basis points. Take that straight to Derek Halpenny. He joins us now on first response to this from MUFG. Derek, good to see you this morning. A hike of 25 basis points, having the QT. And Ueda seems to have pivoted from that uber dove on those 10 meetings that Danny has referenced to somebody who's ready to pull the trigger again. How hawkish was this hike?
Yeah, it was definitely, when you take the whole package, the moves, the changes, and the communication, you definitely have to conclude it was hawkish. We were expecting the 15 basis point hike, but only about 30% of the market was, so that was certainly one element of surprise. I think the JGB purchase rate reduction was broadly in line with expectations, and we're going to see a pretty gradual decline to under 3 trillion worth of purchases per month by the first quarter of 2026. So in line there, but I think the key element in terms of the hawkishness was the guidance, and now we have an explicit guidance to hike rates again, and the bar is pretty low for that. You just have to see the incoming data meet the forecasts of the BOJ, and that will be enough for additional rate hikes. So, and the forecast bias risk is to the upside. So, you know, pretty much everything was on the hawkish side.
It's almost as if what people are calling for the Fed to do, to focus on the forecast, not necessarily the backward-looking data. But in that, Derek, Ueda said that the consumer was solid. If you look at the data, the consumer seems to be anything but solid. Over the past GDP prints, you have seen declines, basically down for a year nonstop. And even in April, Ueda was talking about this idea that the consumer is soft. What do you make of that reasoning?
Yeah, like solid probably is a little bit, how should I put it, unrealistic description maybe, but what I would say is that I wouldn't argue that there's an inconsistency in raising rates in circumstances of weak consumption, because ultimately this is about inflation hitting real incomes. And today was a point in which they had to send a strong signal to the markets that they were tackling the inflation in Japan, and that ultimately that should help to instill confidence in inflation expectations coming down in the future, which ultimately should help to lift real incomes and essentially be a positive for consumption and GDP. And that's actually what's unfolding here in the UK and to a degree in Europe, where inflation has come back down and growth is picking up here in the UK without any easing in the monetary stance. So I think there is justification in the move, even with the consumption backdrop not being particularly favorable, you could argue.
I should actually just correct myself, of course. A 15 basis point hike taking us to 0.25%. Let's talk about the flow. Nobody is fading this yen move. The yen continues to strengthen this morning. Those JGBs are going to become more appealing to the domestic investor, which I think is also a significant arrow in the strengthening of the yen story. But I want to get your take on where the money is. Hedge funds we know are still short, but they had the biggest retreat from their yen short bet since 2011. Do you see the next leg as a capitulation? If the Fed intimates that they are ready to pull the trigger, can that invoke a capitulation and break 150?
Yeah, for sure. I think short-term momentum can definitely see dollar yen continuing to decline. I think you have to go into degrees of to answer that question more specifically. Like, everybody's expecting the Fed to cut in September. Assuming tonight that is implicitly at least endorsed by Powell, then I think the short end, the front end of the curve in the US remains at these levels, maybe softens even further. And going back to what Danny said at the beginning, 75% of the move in spreads that favor Japan in July was down to the US and yields falling. 25% was down to Japan and front-end yields moving higher. So while we've had this move down in dollar yen, of course, you know, still part of that picture in terms of dollar yen is the Fed and what happens tonight and beyond. You know, a weak labor market report on back of a weak CPI report that we've already had. And, you know, that's enough, I think, for dollar yen to be, you know, well below the 150 level by potentially the end of the week.
Yeah, perhaps no one is hoping for a dovish Fed more than you waited. Derek, you're going to stick around with us. Derek Halpenny there. First, let's get some other top stories that are trending on the terminal this morning. HSBC shares are rising after the bank reported second quarter pre-tax profit of $8.9 billion. That is a beat on expectations. Noel Quinn signed off his final quarter as CEO by announcing a further return of $3 billion to shareholders.
We're retaining sufficient to drive growth, and we're distributing any excess because we've still got a very strong capital ratio, CET1 ratio. We're quite well above our target range. Therefore, we're able to both grow and distribute via buybacks.
L'Oréal reported sluggish sales growth in the second quarter as the world's biggest maker of beauty products suffered from weakness in China. The company points to weak consumer confidence as the cause of a decline in the mainland China beauty market, with sales in North Asia down for the fourth straight quarter.
Dead heat. A new Bloomberg poll says Kamala Harris has wiped out Donald Trump's lead across 7 battleground states. Harris was backed by 48% of voters versus 47% for Trump, with the VP overtaking the former president in Arizona and Nevada, and more than doubling Biden's lead over Trump in Michigan.
Coming up, tensions rise in the Middle East as Hamas says Israel has killed its political leader after an airstrike in Tehran. We discuss the impact.
And later this hour, we're going to be counting down to the Fed decision with John Riding of Breen Capital on your Bloomberg Brief.
Could face bigger challenges next.
It was going to keep reading World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
If Israel is attacked, we certainly will help defend Israel. You saw us do that in April. You can expect to see us do that again. But we don't want to see any of that happen. We're going to work hard to make sure that we're doing things to help take the temperature down.
That was the U.S. Defense Secretary Lloyd Austin on Israel's attack on Beirut. They killed the Hamas political leader. Joining us now for more on this story is our Middle East anchor, Joanna Bessecchi. Joanna, good to see you. Look, what more do we know about what happened, and how significant is the figure in Hamas's political leadership, Hani?
Yes, good morning, guys. So we walked in this morning to a statement put out by Hamas saying that their senior leader, Ismail Haniyeh, had been killed in an airstrike launched by Israel in the early hours of the morning, 2 a.m. local time. He was in Tehran, so this is significant. Ismail Haniyeh happened to be in Iran because yesterday was the inauguration of the new President Pezeshkian. He was there attending the ceremony. There are actually pictures of him hugging President Pezeshkian. And then, of course, this assassination happened overnight. Iranian state media saying that it wasn't just him, but his bodyguard as well, who was killed in the attack. Important to note here that we haven't had any official comments out of Israel yet. However, this will be seen as a big, major coup for the Israeli Prime Minister Benjamin Netanyahu, who has vowed to eliminate Hamas leaders ever since October 7. The other consideration, of course, is that Ismail Haniyeh was the chief negotiator when it comes to those ceasefire discussions, and the fact that he is gone raises a lot of questions about whether those negotiations will continue. In fact, just in the last 10 minutes or so, we have heard from the Qatari PM, Qatar being one of the major mediators in the region, saying how can mediation efforts succeed when one party kills one of the negotiators? So that does seem to suggest that the negotiations will be put on hold for the time being.
One of the other questions lingering, Jomana, is the risk of escalation, considering that this happened in Iran. Are we hearing anything from the country?
Yeah, and the timing is really raising a lot of questions here because, as I mentioned, the fact that Ismail Haniyeh was there for the inauguration is symbolic in itself. President Pezeshkian had run on a platform of looking to reopen diplomatic channels again with the West. We know that the Iranian economy is buckling under the weight of sanctions. He was looking to restart some of those conversations again. However, if you listen to some of the language that has come out of Iran this morning, would suggest that that door is probably going to get shut again. We heard from the Supreme Leader, Ali Khamenei, a short while ago. He said, "Severe punishment awaits Israel." That is a quote. The new president himself said, "We will defend our territorial integrity. Iran will make terrorists regret their actions." So fighting words from Iran, and the whole region is on high alert.
Jomana, we really appreciate it. Jomana Bessecchi there, anchor of Bloomberg Horizons Middle East and Africa. Let's talk about geopolitical risk. Back with us is Derek Halpenny, head of research at MUFG. Derek, the past few months have been notable, let's be honest, the past few years, of this push and pull of what do these markets care about? The economics, the central banks, the politics, or the geopolitics? On a day like today, should you be seeking safety?
Yeah, like obviously with the BOJ and the Fed and then the Bank of England tomorrow, I think, this story that has evolved over the last 24, 48 hours has taken a little bit of a backseat. And I think certainly if it wasn't for the other events, there'd be a lot more focus on this. To answer your question, I think geopolitics has become nearly part of the status quo. I mean, in terms of the elevated risks related to geopolitics. And in that sense, markets tend to react when, there's a meaningful link between a geopolitical risk event and the macroeconomic backdrop. So, for example, in Ukraine, there was an immediate reaction because of the significant supply concerns in relation to energy and other commodities. I think for this really to broaden out and become a bigger issue for the financial markets, something similar has to happen, and that is obviously energy supply. And there's no meaningful risk of that over the short term, at least. And in that sense, I think the markets are monitoring it. Geopolitical risks are elevated, but ultimately you don't see any big financial market volatility.
No, and I mean, the response mechanism from oil, one can understand this miniature knee-jerk reaction up 2%, 2.5% at the moment on Brent, but nothing gargantuan because it'll be the reaction function from the Iranians, which was fairly muted. We know that the last time there was a direct conflict between Israel and Iran. Can I ask you about the hallmarks? I mean, Danny talks about is now the moment to seek haven. Yen was being driven by the carry trade rather than geopolitics. The Swiss franc is rising because of real rates. Now, they're two immediate go-to haven currencies. Does the yen get a double punch now with this escalation risk and the risk of more tariffs coming from a potentially a new Trump administration?
Yeah, I think the dynamic in the yen market is changing. And, you know, for example, we look quite closely at the correlation between VIX and dollar yen. And through a lot of the period through the inflation shock, that correlation broke down. But now what we've seen for, it's only a short period, 8 consecutive days, we've seen the negative correlation return between VIX going up and dollar yen going down. So we're starting to see the emergence of that risk haven characteristic. And there's a real reason for this. It's front-end yields in the US are falling. And that's a change in the dynamic of risk that we've been used to over the last couple of years, which we've had these risk-off periods, but rates in the US have stayed higher. So if rates continue to fall in the US, the yen is going to start getting a safe haven bid. And events like we've had will certainly reinforce the momentum to the strong side for the yen.
Derek, thank you very much. That's interesting. In 8 days, you've seen this turnaround and the correlation. Derek, thank you very much for being with us. First response on the BOJ. Derek Halpenny of MUFG. Coming up in the show, we get right into the tech numbers that we had overnight and the latest, the latest moves from the reports on NVIDIA. Context matters. This is Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because, being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power. This is Bloomberg. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
It is Bloomberg Brief. I'm Manus Granny alongside Danny Berger. ASML is among one of a group of stocks that is surging today. We have a report from Reuters that the US planned to exempt chip equipment vendors from the Netherlands, Japan, and South Korea from the export restrictions. A big political shift if it comes to pass. Tom McKenzie is with us. Tom, what do we know about the potential curbs perhaps being less onerous than we had thought? ASML is on fire.
It is. What a move in ASML. And you saw similar moves in companies like Tokyo Electron in the Asian trading session as well, because they look like they may be exempt from these restrictions, at least for now, and according to this reporting from Reuters. Look, we've seen this barrage of restrictions, of course, on companies that supply the highest end kit in terms of chip making into the Chinese market over the last few years. This was going to be the latest and arguably most aggressive, one of the most aggressive chapters in that attempt by the Biden administration, by the US, to restrict China's access using this foreign direct product rule. But the reporting from Reuters suggests there is a carve-out, at least for now, for the Netherlands, Japan, and South Korea. Now, analysts at JP Morgan says this could be because they want to set up a negotiation with those individual countries around the companies that supply the Chinese market. But there's a breather right now. Investors breathing a sigh of relief. Don't make the mistake, though, that these companies are going to get free access to the Chinese market. They are not anytime soon. That whole theme continues. It's just the nature of these restrictions. And by the way, ASML doesn't supply its most high-end lithography machines into the Chinese market right now, precisely because of previous restrictions. But we wait to see the details on this. Taiwan, Malaysia, not excluded, so sales still part of these restrictions, but certainly you're getting a lift to those companies listed in Japan, South Korea, and the Netherlands as a result of this. But there's more detail that's needed.
Well, like so many places in this market at the moment, Tom, it is a question of what do you pay more attention to, the fundamentals or the politics? And yesterday it was the fundamentals. You had Microsoft earnings where they showed a 80% rise in their CapEx in the first quarter and said that demand for AI is outstripping capacity, maybe leading to some of the softness and the market disappointment. Is that the theme, taken together with what we heard from Alphabet, that is just going to take longer for AI to deliver?
I think maybe there's the downstream to upstream, upstream to downstream analogy going on within the semiconductor space. The chips, the picks and the shovels, I should say, so the chip makers are still doing well. You saw that from AMD raising their forecasts for the number of AI accelerators that they plan to sell this year from 4 billion to 4.5 billion. We know that was consequential for analysts, investors watching that stock. Then you have, of course, the story around Microsoft and the spend exactly on that kind of hardware. As you say, going from 14 billion in the last quarter to 19 billion, if you include the leases for things like servers and data centers. The focus on the monetization piece for the likes of Microsoft and later today Meta, that scrutiny is still there. The CapEx spend is still there. Look, if you're looking for a silver lining for Microsoft, the AI piece of the cloud demand did increase this quarter. The cloud growth was a little softer than the previous quarter, but within that growth, the AI part actually increased. That suggests the momentum is still there.
Okay, Tom, thank you very much. That is Tom McKenzie, anchor of Bloomberg Daybreak Europe. Still this morning, Microsoft is weaker, down by 2.7%, but overall it is a big tech rally because of the chip policy. Okay, coming up, we count down to the Fed decision with John Riding of Green Capital.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
The Bank of Japan hikes and plans to halve its bond purchases. Next, we count down to the Fed. A turn in fortune, Microsoft takes a knock, but tech rallies on reports of a shift in the chip export policy from the US. And Israel kills two enemies in two capitals with attacks in Beirut and Tehran. Hamas confirms Israel has killed its political leader. Danny, good morning. These tech markets are on fire, and a nice pivot from the BOJ.
It's hard to know where to start with this, Manus, because there is so much going on this morning. It is a relentless news flow that's impacting these markets, the push and pull between politics, geopolitics, and the fundamentals. I've been talking about that all morning. For now, it is the geopolitics that is dominating the tech trade. S&P futures up nearly 1%. It is the NASDAQ that is up more than 1%, 1.4% this morning, with a report from Reuters, as you mentioned, Manus, that the U.S. will be removing some of those strictest of curbs when it comes to South Korea, Japan, and Amsterdam. Remember, a lot of the tech sell-off, it also coincided with the stricter curbs on chip makers. That was one of the fuels of the legs of the sell-off. So it makes sense that some of that turns around. Microsoft, though, some disappointment overnight. That, again, is being overshadowed, though Microsoft shares are off pre-market. Then we get to the Bank of Japan. We have a hike, and we have a plan to have bond purchases by 2026. Assuming everything goes to plan, Ueda says that they will continue to hike. That's enough to see the yen continue to strengthen by 1.3% versus the dollar. Meanwhile, NYMEX crude, Manus, this has to do with the geopolitics, as you mentioned, with an Israeli strike, both Hamas and Hezbollah. NYMEX crude up 2.6%.
Yeah, I mean, that's a fairly decent move in that. On the Bank of Japan, Danny, as we've just been talking to Derek Halpenny, as he said, look, the next, shoe to drop here is the Fed. We'll get a little bit more indication on whether they are ready to really cut in September. I think the cap, where Ueda says 0.5%, is not really a ceiling for him. It's a question of how quickly does he actually want to get there, because that is a distinct shift. I think, 10 dovish tilts in a row after each meeting. So it's a shift. And how quickly do they really want to get to 0.5%?
Yeah, again, this is the first meeting Ueda has had, his 11th meeting, but his first one where the yen has strengthened afterwards. I think a lot of people expected him to be dovish. And that's why you see some of the sustained gains in the yen that we're seeing this morning. Because it's not only the ceiling, man, it's him saying, we're going to continue to hike, assuming everything goes to our forecast.
And I think I just caught up with Jane Foley on the IB, and she's talking about real wage growth. And if real wage growth accelerates more, that gives them the ammunition to get on with it. You talked about geopolitics and politics, and geopolitics is front and center overnight. We've got tensions rising in the Middle East, with Israel killing two enemies in two capitals in the span of 7 hours. The U.S. Defense Secretary Lloyd Austin spoke after Israel's attack on Beirut.
If Israel is attacked, we certainly will help defend Israel. You saw us do that in April. You can expect to see us do that again. But we don't want to see any of that happen. We're going to work hard to make sure that we're doing things to help take the temperature down.
Joining us now from Dubai is Jumana Basechi. Jumana, look, we know what happened. We know the choreography of what happened. This now comes down to the response mechanism. This incident took place in Tehran. This is the political leader who was involved in negotiating the peace settlement. How do we think Iran will respond? An escalation or stand pat for now?
Well, a lot of that resides on the shoulders of the new president, the Iranian president, Pezeshkian. And the reason Ismail Haniyeh was there in the first place was because yesterday was the inauguration ceremony. Already we've had a couple of comments come through from the Iranian president saying, we will defend our territorial integrity. Iran will make, this is a quote, terrorists regret their action. It is unsettling for them that the assassination took place on their soil. And then a short while ago, we heard from the Ayatollah, the supreme leader himself, saying severe punishment awaits Israel. So in all likelihood, there will be a response forthcoming out of Iran. Also worth mentioning, guys, that Ismail Haniyeh was the chief negotiator on these Gaza ceasefire discussions that have been taking place. The fact that he has been eliminated means that there's very little hope that a diplomatic agreement can be come to. And indeed, we heard from the Qatari PM a short while ago saying, how can mediation succeed when one side has been assassinated?
And this morning, Joanna, you are seeing a decisive move in oil, 2.6% for WTI. But we've seen this in the past when there have been flecks of potential escalation that the market reacts as a gut punch and quickly undoes this. So how do we think about a potential lasting impact on oil?
It's interesting because so far the oil market has been pretty adept at shrugging off all of these geopolitical concerns. Remember, right after October 7, we got to around $90 in Brent, then we scaled back down again. Shortly after April, the tit-for-tat events, retaliation between Iran and Israel, we also spiked up to $90. We've been steadily declining in the run-up to the last couple of days. This morning, you can see we're up more than 2% on the news as investors start to price in further geopolitical premium. But one thing that I would just say is Iranian oil supply is actually at the highest level it's been in the last 6 years. They have been pumping more than ever, circumventing the sanctions that are in place. They're finding a big buyer in the hands of China. And so the question really is how the US would choose to respond and whether they would look to impose further sanctions on Iran should Iran look for retaliation to the events in the last couple of days. So a lot of moving parts here, but everyone in the region is on edge.
Jomana, really appreciate your reporting on this. Bloomberg's Jomana Basechi. Now, as Manus and I were talking about at the top of the show, there's a lot to get through today. Geopolitics, tech earnings, and BOJ, and maybe you forgot that there's a Fed decision at 2 p.m. You'd be forgiven if you did. Breen Capital's John Riding, looking ahead, writing this, Powell has to signal that this is not the start of an easing cycle because the economy is weakening, but a recalibration of real Fed funds rate. However, if Powell fails to convey this message successfully, markets could price in more rate cuts than the Fed expects to deliver. John joins us now. He's the chief economic advisor at Breen Capital. It's fair to say that Powell has had some varying success in his messaging when it comes to things like that. So what's your confidence that he can thread the needle?
We all remember December, and when he said it was natural when the Fed funds rate was near its peak to think about interest rate cuts, and that triggered a big rally in the fixed income markets. The market moved to price in almost 7 cuts in 2024. Now, it's difficult because he's not an economist. He does a good job staying on script, but he can be potentially a little loose with words. So, but he's been much better since that December meeting in conveying his message. And he's not the only one who's going to be out there conveying it. A lot's going to be on the shoulders, I think, of people like Governor Waller later on, New York Fed President John Williams, and others, if he gets the messaging wrong. But right now, I think the markets are priced to where the Fed wants to be, which is bringing the Fed funds rate down a little bit this year. There's 2.5 cuts priced in for this year. I think the Fed's going to deliver. It's been a long-standing view of ours. They're going to deliver in September with a quarter-point cut. They're going to deliver in December with a quarter-point cut. And the reason being, as inflation continues to decline, as the comment, the quote you read out a couple of minutes ago, real interest rates, inflation-adjusted interest rates rise. So policy's getting tighter, and policy's getting tighter as inflation approaches the 2% target. And the Fed's used this airplane analogy in terms of hikes. Well, it also applies when you're trying to land a plane at 2%. You don't power up and have a steeper angle of descent when you're coming in to try and land on the runway.
What sympathy do you have with, loose lips sink ships? So it is going to be down to the Fed speak later on in terms of understanding really the trajectory of whether it's a tweak or something more substantial. But Alan Blinder talking about tight real rates. Dudley, we've looked at this op-ed from the former New York lead, and he is saying the situation has changed. So the question then becomes, whether, and our guest yesterday said, we're deep in policy error. Would you agree with that? We are in effective policy error, and they need to be more aggressive, earlier, and more.
It's difficult for them because the big policy error that they committed was to continue to ease by buying $120 billion worth of bonds per month in 2021 as inflation was taking off, and dismissing the rise in inflation as being transitory. So I have some sympathy with the view that there is a good case for the Fed to lower interest rates at the meeting today. But if they did, not having prepared the markets and having made the mistake on the other side, they might be seen as jumping the gun. And so they have to be conservative. They have to be slow. And the economy is strong. GDP growth in the first half of this year was 2.1%. Yes, the unemployment rates crept up, and that's something to keep an eye on. And I think the key thing here, Manus, is once we get the signal, which I think we will get today, the Fed is ready if the next two inflation reports between now and the September meeting play ball, the Fed's ready to cut and get the message out that it's a recalibration, it's not a sequence of cuts. But if the economy does weaken, that's when you would transition from a sequence of cuts, from a recalibration policy to a sequence of cuts. So now what happens is all the reports, like Friday's jobs report and so on, will be under extra scrutiny for the markets to figure out what kind of interest rate path are we going into. And it doesn't have the luxury today of having a new set of forecasts to present and say, this is what we think. It's going to fall on Powell in Q.
Well, this is part of the reason that both Jan Hatzius of Goldman and Mohamed El-Erian have made this argument that they should be hiking now, because they might be too data point dependent, and the data is indicating that inflation is slowing, there are some pockets of weakness, and they could get spooked by one print in the next 2 months that makes them hold back from cutting. Is that a fair concern?
It is a possibility that we could have a poor inflation report. But the interesting thing is we had the poor inflation reports in the first quarter of this year. And we looked at that and said, this is a repeat of a pattern that we've seen where at the beginning of the year, inflation picks up as companies push prices through, and the seasonal adjustments don't take care of it. So we had some really bad-looking quarterly numbers, looking quarter on quarter. But that's happened last year as well. And so the year-on-year inflation rates drifted down. Now, in the second half of the year, the chances are that as that seasonal adjustment factor unwinds, that in the second half of the year, the inflation reports, as they were last year, could be quite benign. So I don't think they will be derailed, and they shouldn't be derailed by a single data point. The main thing is the Fed has said, we can afford to be patient because the economy is in decent shape. The labor market's in decent shape. We saw a rise in job vacancies yesterday were relative to where it was previously reported. And so this adjustment is taking place, and the Fed can be patient and move slowly. And if they were to be derailed by a couple of bad inflation prints, then perhaps they shouldn't be cutting rates. But I don't think that's going to happen.
Well, they've certainly got another couple of things in their favor. The slowdown in China, the drop in energy prices, commodity prices have undone all of their gains for this year. I know there's a bump in oil this morning, but you know the elements are there. John, let's see what the Fed does, whether they give a helping hand to Ueda over at the Bank of Japan. Another leg up for the yen. Go on. John Riding there of Brain Capital, our guest ahead of the Fed. Coming up, we'll dig into the chips story this morning. You can see we're bid this morning on ASML and the semiconductor industry. We'll talk about those exemptions that we expect from the US for their allies. Good morning. Context matters.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
It's your Bloomberg Brief. Danny Berger and Manus Cranny in New York City. So ASML is among a group of stocks, Manus, that is surging today. There's a report from Reuters that the U.S. is planning to exempt chip equipment vendors from Netherlands, Japan, and South Korea from upcoming export restrictions. Let's bring in Bloomberg's Mandeep Singh on this. Mandeep, I looked at this and I thought, okay, Japan, South Korea, Amsterdam, that's where all most of these chips are being made. So what do we make of the U.S. lifting those restrictions on those countries?
I mean, when you look at ASML, the machines that they are making requires a lot of parts that are coming from these countries. So if you put export restrictions on all the countries, that's not helping ASML's business. And I think because these countries are allies of the U.S., the government has decided they know who they are doing business with, and they are letting off some of the restrictions, which I think is a big positive for ASML, because there clearly is more demand for their equipment than they can ship right now.
Do you think that they can bank on it as a long-term political narrative from the United States? You are our allies. We will allow you to send these chips into China. If there's a shift in the White House, and we know that tariffs are one of the big levers that not just tariffs, but also restrictions and trade are going to be an alpha for a Trump administration. So how long-term could this policy be?
Well, obviously things could change come January, depending on who we have in the administration. But I think right now, I wouldn't call this as shipping to, Chinese companies. There could still be restrictions in terms of who they ship to.
Sure.
But the fact that more countries are allowed to ship, the equipment and the parts, it's just a positive in terms of making sure they can fulfill the demand they have for the equipment.
Mandeep, it's kind of like a feast, as Manis likes to put it, of stories to choose from this morning. There's a lot with tech. I mean, there's a lot in general today, but there's a lot with tech. We have to go through Microsoft earnings yesterday because it is falling pre-market, I think some 3% this morning. And you get this idea that they have more demand for their AI features than there is capacity. Is that where the tension lies for this stock?
Well, and also they called out some weakness in the EU region in terms of the traditional cloud consumption. So the Gen AI piece was robust, 8 percentage point of contribution. It's the non-AI piece, especially in the EU. That's where they called out the weakness. And you have to ask yourself, why are companies not spending on the CPU stuff? And that's where I didn't think they came out very clean in terms of the answers they gave, but the AI part is robust. The Office 365 Copilot, the GitHub Copilot, these are the AI products, and they did very well.
Okay, well, I mean, we're seeing a nice shift this morning. NVIDIA is up over 5%, and AMD also shifting higher. So there's a good turnaround in the tech story. What has Mark Zuckerberg got to ask for? He asked for patience the last time around. What do you think his narrative is going to be today?
Well, so they are going to raise CapEx. And I think what the street wants to know is how much of that CapEx is going towards AI versus how much is going towards reality labs. Street doesn't like the reality lab spending that much, although I would give them credit for the AR glasses. They seem to be having some momentum behind them, but clearly the street will be more excited with the AI piece than they would be with the reality.
Danny and I are grounded in reality every day. We don't live in some fantasy world.
I'm imagining you doing the show with the VR headset. Yeah.
Well, we could. This is our reality. 5:49 a.m. Mandeep Singh on the tech stories, a smorgasbord of news. Over in Washington, the Vice President Kamala Harris wipes out Republican nominee Trump's swing state lead in the latest Bloomberg Morning Consult poll. Let's take a listen to her speech in Atlanta yesterday. She ramps up her campaign efforts to grab the nomination as the presidential candidate.
The momentum in this race is shifting. And there are signs that Donald Trump is feeling it. Well, Donald, I do hope you'll reconsider to meet me on the debate stage. If you've got something to say,
Kevin Whitelaw is with us. Fight and talk there from the Vice President. Kevin, good to see you this morning. But this poll, I mean, it really, it sort of pits Harris and Trump almost head-to-head, and a big move in the swing states.
That's right. The swing states really shifted towards at least towards Harris, and now it's really a statistical tie in basically all the key swing states. So that's an important sign, obviously, to show the race has changed and sort of reopens the ability for the Democrats to compete in a couple of states that had started to look out of reach, including Arizona and Nevada. To me, the most interesting element of that poll is the numbers of people, and particularly blacks and women and young Americans, saying that they're now more likely to vote with Harris in the race. It's quite significant. A lot of people saying they're much more likely to vote, and we all know from watching these races before that turnout is an enormous part of this, and this is something where the Democrats had been very worried that Biden was really dragging them down just on that enthusiasm, that idea of getting people out to vote. So seeing the likelihood of voting going up is going to be something that really buoys Democrats as they try to avoid a wipeout in November.
And you see this shift really in the kind of momentum that Harris is bringing, not in what Biden was necessarily targeting before the Biden campaign of places like Pennsylvania. It's now these Sun Belt states, places like Arizona. Does that change potentially who Harris could pick as her vice president?
Yeah, I mean, I think she still obviously wants to win those states up in the Midwest. So Pennsylvania, Wisconsin, Michigan are still, sort of the easiest path. But now she gets to compete in 2 or 3 other places as well. So I think she still probably is most likely, if thinking about the electoral side or sort of the electoral map, get a swing state governor. Those northern states are still the ones that sort of make the most sense for her. But obviously, but now these other states are back in play in a way they were out of reach before. And that means that Trump is going to have to compete harder in those states. So instead of, looking at Virginia and other states to expand his map, he now has to try to basically fight a rearguard action to keep the states that he had thought would be an easier path for him.
Never a dull moment. Kevin, appreciate it. Kevin Whitelaw there. Yep. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
You're watching Bloomberg Brief. Danny Berger and Manus Cranny in New York. Let's get you set up for your trading day on this Wednesday. Earnings come from Boeing, Kraft Heinz, and Marriott all before the bell. Then Meta and Qualcomm after the market close. Plus some data, ADP jobs, and at 8:15 Eastern and Chicago PMI at 9:45. And then all that leads up to the main event. It is the Fed's rate decision at 2 p.m., followed by Chair Powell's news conference. So that will give us the dollar side of the yen-dollar equation, Manus.
Absolutely, it's the third leg on the stool. And if you think about it, we had a 10-big-figure rally in yen. Today, we've just had another 2.35 rally. And this is a very clear message from Ueda. He shifted from that dovish position that he's had to 0.5% is not necessarily a ceiling. This is a governor who's laying the table for more hikes to come. It's about the calibration of those hikes.
More hikes to come, assuming that the forecast or that the data meets his forecast. We talked about consumer strength, where previously he had been worried about weakness. He'd been worried about the impact of tighter rates, but this time around says that it is just a tweak and it will not tighten things unduly. Okay, that's it for brief surveillance up ahead.
the linear business is not going anywhere. The sports business is moving and is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be, every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
I can understand why the Fed has been so cautious after the whole transitory fiasco, but I think I'm getting close to the point where I think they're too late now.
They'll keep on saying 2% is our target. We'll get there when we get there.
Really? You're going to wait till something goes wrong before you start cutting rates? Isn't that too late?
It's time now to move to a less restrictive policy stance.
I think rate cuts are definitely coming. I just think that at this point, there's not a really strong case for waiting.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
It is Fed Decision Day, live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. What a morning, what a day, what a 24 hours we've got coming up for you. Let's start with the scores. On the S&P 500, futures elevated, kicking higher by 0.9%. On the NASDAQ 100, outperformance up by 1.4%. Compare and contrast. The NASDAQ, before today, set for the worst month of 2024. At the same time, the Russell is set for the best month of 2024. The Russell up by 0.8%. Lisa, the mood around tech just improves a little bit. We'll talk about Microsoft in a moment. AMD knocking it out of the park. Good news. And then this tech exemption chip export story coming out of Reuters, lifting things around the world.
It seemed like there was this recognition that there wants to be some sort of global cooperation in the chip sector, opening up the doors with everyone other than China, which is the reason why you're seeing ASML and Tokyo Electron surging. AMD, though, and I'm glad you brought this up, reporting a higher than expected earnings, showing that they're gaining share versus Intel, yes, but also sort of plowing in just a little bit in NVIDIA's market share. There's this question of, are we seeing the broadening out within the AI story, which is what a lot of people have been waiting for.
And just like that, sentiment starts to lift. Let's go through this with some purpose. Let's talk about the day ahead. This is what it looks like. A little bit later this morning, we get an ADP jobs report. Then later on this afternoon, 2 p.m. Eastern time, the Fed decision. 30 minutes after that, a Chairman Powell news conference. After the close, we'll get Meta earnings. I want to begin by talking about a central bank decision we've already had. The BOJ hiking interest rates, and Lisa unveiling plans to halve its bond purchases by 2026.
Kit Jukes came out and he said the Bank of Japan message was clear. They don't want the yen to go on weakening. Even though you are seeing some moderation in terms of consumer price inflation, even though you are seeing some signs of weakness in the underlying economy, it did not stop them from going ahead for a 1-2 punch that caused basically what we're seeing is something more than a 6% rally in the yen versus the dollar so far this month. It raises this question, has this become the priority? Was this the political will? And frankly, the Bank of Japan saying, all right, All you carry traders, get out.
Certainly feels like an objective. We came this close to breaking 150 in today's session. The low of the session, 150.07. We're down by about 1.6% at the moment to 150.33. That's foreign exchange. We'll work through each individual asset class. Let's turn to the commodity market and talk about crude. A rally in WTI, a rally in Brent crude up by 2.3%, WTI up by 2.6%. Two very important strikes taking place in the last 24 hours. Israel conducting both, Lisa, in two very different places.
Well, this is the problem, right, for a lot of people is how do you avoid escalation when not only do you kill a Hezbollah operative in Beirut, right, in the capital of Lebanon, but also a Hamas leader in Tehran, in Iran. And this is the question, does Tehran respond in a much more advanced way, given the fact that Israel was able to kill a visitor under its nose? And this is what a lot of people are wondering. There is this sense from Lebanon of trying to sort of offer up some calm, negotiate, etc. Iran's the wild card here.
This just reinforces the risk of a regional conflict. In about 25 minutes' time, we'll get the latest from the region from Jemana Basechi. Look out for that, for the latest from the team here at Bloomberg. And then we'll catch up with Norman Rule about some of the risks. You always talk about the potential for an accident here, Lisa. The real potential, not just for an accident, but real escalation going forward from here.
Well, ultimately, this isn't a conflict that can be solved. It can just have the temperature turned down. And when you have a conflict that can't be solved with people dying, with the threat of sovereignty on all sides, it raises the temperature dramatically. So how do you turn it back down, especially at a time, and this is actually what Peter Scheer was talking about, especially at a time of uncertainty of global leadership and where the impetus is going to really come from to really pressure the different leaders to get together and come up with some sort of peaceful solution.
A lack of leadership right here in the United States of America as well. I promised we'd talk about Microsoft. So we'll talk about Microsoft and we'll start with the bad news and then we'll sort of get to the good news a little bit later. Let's start with the bad news. The stock is down by 2.8%. It was down a whole lot more than this. Essentially, cloud computing revenue posted a slowdown in quarterly growth. That's kind of the bad news. Let's talk about the good news. Yes, that deceleration will continue for the current quarter, but in the back half of fiscal 25, things start to re-accelerate, Lisa, and the contribution coming from AI is picking up as well. We speak to Dan Ives in just a moment. I imagine he'll talk a lot more about the latter than he will about the former.
The issue in the story here is the same thing that we saw in some ways, or it rhymes a little bit with what we saw from Alphabet, in that right now Microsoft is being penalized for their investment in future growth because people aren't seeing the current growth in excess of what people currently expected. It's not as though they massively disappointed, right? It was just marginally in line or slightly below estimates. But this is the thing. CFO Amy Hood said yesterday that even though Azure growth will continue to slow in the current quarter, and this is the key, investments in data centers and servers will let the company capitalize on demand and accelerate Azure growth in the second half of, as you were pointing to, 2025. Why are people penalizing future growth? It's because, frankly, they're running out of time and they're looking for excuses to monetize the gains of this year. And that, I think, is the story that we're seeing with Microsoft.
The stock is down this morning by 2.8%. The broader story, the scores look like this on the S&P 500. A lift here by almost 1 full percentage point on the S&P. We are totally unchanged going into that Fed decision, the 10-year 413.94. Coming up this hour, we'll catch up with Julian Emmanuel of Evercore. With stocks bouncing back this morning, we'll speak to Dan Ives of Wedbush as Microsoft's earnings disappoint some investors, and Lara Rame of FS Investments ahead of the Fed's decision a little bit later on today. We begin with our top story, stocks bouncing back ahead of the Fed decision and more Mag 7 earnings. Julian Emmanuel of Evercore writing this: our year-end S&P 500 target of 6,000 is intact, driven by earnings and a Fed about to cut interest rates. There are no signs of imminent recession or excessive speculation that would typically mean this bull market is over. Julian, good morning. We've got a lot to work through. We've done about 6 minutes of this program and hardly talked about the Fed, so maybe we should start with the Federal Reserve. Do you think when they begin to reduce interest rates, and I'm sure your base case is September, like so many others, are they doing so because they're increasingly comfortable with inflation or increasingly uncomfortable with the labor market?
So this is one of these times where we go back and we look at Fed history. There's really been only one time where they were able to cut rates because they could, not because they had to. And when you think about the labor market, it's no question it's weakening, but it's weakening very gradually. And to us, the bigger story is the fact that the confidence about inflation's trajectory is very, very much front and center.
You say gradually, others say sharply, including Citi's Andrew Honhorst. Fed officials are likely to take the sharp drop in hiring in some categories, along with other signs like the rising unemployment rate, as a warning that the labor market could weaken more sharply? Where are we going to be by the time we get to September?
Probably a tick or two higher from here. But again, and obviously this is one of these squishier concepts, but most academicians would tell you that Nehru is higher from where we are now. And when you go back and you think about it, the weekly jobless claims, right, around 240,000 or so average, and you think about it on a population-adjusted basis versus numbers 10, 20, and 30 years ago, the strength of the labor market is undeniable, particularly when you zoom out.
That said, you have the likes of Michael Darda over at Roth MKM who came out. I think this note caught both of our attentions, John. Bye-bye, soft landing. It was nice knowing you. It's a little bit different than I can see the sort of disdain in your face as I say that. You know, there's this question, when you look in the internals of some of the data that we got out yesterday, whether it was JOLTS report, the hiring rate coming out at the lowest level, if you strip out some of those key pandemic months going back about a decade, you could take a look at the pace of people who say that jobs are easy to get versus those who could say it's hard to get. You could see that, you know, differential going down to a significant degree. Basically, things are tight, are sort of loosening up in the labor market in a way that a lot of people are saying is a pace that raises alarms. Why doesn't it for you?
So I think you have to sort of step back and think about the evolution of the last couple of years, right? So what we learned at the end of 22 was there were companies that actually had stockpiled labor on a precautionary basis because the employment market was so tight. And then they went in 2023 and said, you know what, we're going to focus on margins, right? And so essentially, in a lot of ways, corporate America has had 2 years of preparing for the economic slowdown, which is why, in part, we're seeing this gradualism. Now, does it mean we're, you know, not going to have a negative GDP quarter, or perhaps even what you would call, you didn't call it in 2022, a recession? Could that be in the next year to year and a half? It can, but we would argue that even if that does materialize, the economy has still been rationalized sufficiently that it's not going to be as painful as a typical recession.
So given that backdrop, let's get to your 6,000 call, the idea that we've seen big tech kind of lead a lot of the stock markets down over the past couple of weeks. Do you think that they're going to lead on the way up, even at a time where it's clear that investors have kind of run out of patience for anything other than just extraordinary beat at time and time again?
Well, I think this morning is really kind of reflective. Again, remember, there's been sort of so much news, whether it's central banks, politics, you know, the questions about whether the economy is slowing or accelerating. You know, how do you reconcile the labor market with the last reading, 2.8% GDP? But at the end of the day, this morning is about the reminder that generative AI is one of these themes that has durability, and in our view, you know, is going to be central to getting to 6,000.
What about the everything else part of the equity market? Can we talk about things beyond big tech? This is what happens when you have the biggest bull on the street. It's just Lisa and me going back and forth, throwing up bearish ideas and seeing the bull bat them away.
We're going to continue this for the next hour. Carry on.
I'll go through some commentary we've had recently. Some bearish stuff, all right? P&G, slower price increases. Kimberly-Clark, slowing price increases. McDonald's, first sales slide since 2020. Pepsi, consumer is more challenged. Nestle, value-seeking behavior. We heard from Starbucks overnight as well. Not great either. All of this sort of piling up. The consumer's not great. It's not great. We're losing pricing power. We're losing pricing power. Can't put prices up anymore. Sales are down. What does that mean for the cyclicals, for everyone sort of charging into small caps and buying the rest of the market?
So, again, you have to differentiate, and part of the beauty of the market in 2024 is that correlations on a stock basis are so incredibly low that it really is a market of stocks and less a stock market. And what I would say there is, think about it. We have been gnashing our teeth for a year. We need broader participation. We need the rest of the stocks to catch up to the Mag 7. Hello, we've got it in the month of July, and now everyone's freaked out because part of the story is the give back in the larger cap tech stocks. In our view, the path to 6,000 is likely going to be what you saw in 2016, what you saw coming out of the first downturn of the technology age, the internet age in 1996, all of these stocks are going to participate in our view.
Mid-90s, not late 90s. Sounds like Dan Ives. Dan's joining us in about 5 minutes' time. Julian, it's good to see you. Thank you, sir. Julian Emanuel of Evercore spending way too much time with Dan Ives in a green room a little bit early this morning. I noticed that. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. There's a worldwide rally underway in chip stocks this morning. Reuters reporting that the Biden administration plans to exempt chip equipment makers in Japan, the Netherlands, and South Korea from upcoming export restrictions. Those restrictions would prevent export of products that use any American tech from around the world to about half a dozen Chinese semiconductor manufacturing facilities, Reuters reported. Hamas says Israel killed its political leader, Ismail Haniyeh, in an airstrike on Tehran. Haniyeh, a chief negotiator for Hamas, was in Tehran for the inauguration of Iran's new president. Haniyeh's death follows an Israeli strike on Beirut last night, targeting a senior Hezbollah commander. That attack was a response to a rocket assault that killed 12 children and teenagers in the Israeli-controlled Golan Heights over the weekend. And a new poll suggests that Kamala Harris has wiped out Donald Trump's lead across 7 U.S. battleground states. The vice president rides a wave of enthusiasm among young Black and Hispanic voters. The Bloomberg News Morning Consult poll found 48% support for Harris and 47% for Trump. That reverses a 2-point deficit for Joe Biden before he withdrew from the race. However, the result is within the poll's margin of error, meaning the election is still a toss-up. And that's your brief, John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, Microsoft falling short.
We added new AI accelerators from AMD and NVIDIA. We know how to manage our CapEx spend to build out a long-term asset. It's more important to manage to capture the opportunity with the right product portfolio that's driving value.
The bullish view is up next with Dan Ives of Wedbush from New York City this morning. Good morning.
On the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Live from New York City, welcome to the program. Long day ahead of us. Equity futures right now on the S&P 500 shaping up as follows. Bouncing back up by almost 1 full percentage point. The bond market going nowhere. 413.94, very close to the lows of March of this year on a US 10-year. Under surveillance this morning, Microsoft falling short.
We now have over 60,000 Azure AI customers, up nearly 60% year over year, and average spend per customer continues to grow. We added new AI accelerators from AMD and NVIDIA, as well as our own first-party silicon Azure Maya. We know how to manage our CapEx spend to build out a long-term asset. It's more important to manage to capture the opportunity with the right product portfolio that's driving value.
So here's the latest. Microsoft shares falling in the pre-market after its cloud computing service reported a slowdown in quarterly growth. Microsoft's main growth engine seeing revenue rise 29%. That was down from 31% in the previous quarter, disappointing some investors looking for a return from the company's AI investments. Dan Ives of Wedbush writing this: while there will be some knee-jerk reaction in the stock, we believe the takeaways for the broader tech sector is this AI monetization story is real. Nothing from this quarter or conference call makes us less bullish in our AI thesis. Dan joins us now for more. Dan, it's good to see you.
Great to be here.
Let's start with that cloud revenue number. So that disappointed, and then we started to hear a little bit more. The contribution from AI is picking up. We're going to see that softness continue in the current quarter, but then re-accelerate. Things start to pick up again in the back half of fiscal 2025. Can you just frame the second piece of this for us? Why do you think that is so much more important than what we're seeing play out this morning?
The words heard around the world, and I think around the street, when Nadella and Amy talked about the acceleration for Azure in the second half, and that AI monetization, that actually starts for real in January. And that's, look, ultimately, you go back to last week, the knee-jerk in terms of the white-knuckle moment, Alphabet. Street needed to hear about validation and monetization for AI. They heard it from Nadella on that call. Bullish, not just from Microsoft, for the broader tech sector.
Did you find it odd that the stock's down this morning?
Oh, I mean, in my opinion, and we were talking last night, I mean, I think there's stock that goes green in terms of, I can't say today, but...
This doesn't stick today?
I'd be shocked if it sticks. Because anyone that heard that conference call, you come out more bullish on Microsoft rather than any sort of skepticism because of the acceleration from Azure, because of monetization, because of commercial bookings stronger than expected. And that's why, look, these knee-jerk, the haters come out, they've been negative on Microsoft the last 150 points. It all is about the AI revolution, the AI monetization, validation.
Why did you turn to Lisa then if you started talking about haters?
He's like the haters over here who have been talking down this story forever, Lisa. No, listen, I don't think it sounded like people were the haters who were actually skeptical of these numbers. They weren't coming out and saying AI is bogus and that everything is wrong and they're going to tank. It was that they weren't surprised dramatically to the upside, and the actual gains that we've seen on the stock imply significant profit gains going forward. Here's one investor. It was really about the cloud services number. It needed to just be a little higher. What do you make of that? Just sort of how people have priced in the forward growth rate and whether they've gotten over their skis in terms of the pace?
No, look, it's a great point. And that's why the most important thing here is show that monetization's coming. Show that you're now going to have growth rates on cloud in the 30%. What ultimately, if you trajectory it out, an incremental 15, 20 billion for Microsoft, you're not going to see that right away. What basically Nadella and Microsoft showed you, this is coming, and we're going to guide to it. So I think that was the most important thing for the call, despite, in terms of the actual quarter, being strong, but not a wow, pop the champagne quarter.
There's also this issue of who's going to benefit the most as some of the big tech names build out their cloud provisions and build out some of their AI capacities. We both were really struck by AMD overnight, actually seeming to gaining share. Do you think this is a game changer in terms of how much they could compete with NVIDIA?
When Lisa Su talks, everyone listens. And I think this just shows it's not just about the godfather of AI, Jensen and NVIDIA. AMD, they're getting into that AI party. It's 9 p.m. They're getting onto the dance floor. So what you saw from Lisa Su, bullish for AMD, triangulate that with Microsoft, with what I believe we're going to hear from Amazon, Meta, and others, it shows monetization starting, the next phase of AI playing out. That's bullish for ServiceNow, Oracle, Dell, Palantir, Salesforce. Now it's about second, third, fourth derivative playing out. That's why last night everyone's focused on, there's two companies in the world everyone's focused on, Microsoft, NVIDIA. AMD said, hey, don't forget about us. important call.
NVIDIA up in a pre-market as well off the back of some of this. There was also this story, Danny was talking about it, the story out of Reuters that's lifting Tokyo Electron and ASML, the report that the Biden administration planned to exempt chip equipment makers in Japan, the Netherlands, and South Korea from upcoming export restrictions. How important is that story?
Very important, because what's the one thing that could spoil the AI party? It's not Fed, it's not valuation. It's about restrictions. It's about basically like what we see on tariffs and ultimately this U.S.-China cold tech war that's playing out. That was a huge move by the Beltway. Just keeping that tightrope where you want to sound tough and obviously in terms of what's playing out, very significant for ASML. And also it just shows you cannot disrupt a supply chain as all of this constraint, and Microsoft talked about it as well, as playing out.
So we've done the cloud business, we've done the chip makers, we need to finish with your favorite, your baby. We need to talk about Apple. The Mark Gurman report of the last couple of days, you've seen it. The chance that the iPhone is released in September without all the AI goodies. Now, you've had this thesis for a long time. They'd come out with this phone, there'd be this monster upgrade cycle. It's one of the biggest pillars for your bullish call on the Apple stock. Does it change with that report from Mark Gurman?
Not at all. I mean, look, great report by Gurman as always, but developers got it on time. All that matters is developers are going to build hundreds of apps on it. And on iPhone 16, even if it's an update, October, we're talking a few weeks. And I go back to all of our Asia checks. We'll be in Asia again this weekend. It started off as 80 million units for iPhone 16. Guess what it is now based on our checks? 90 million. So the point is, it is not going from 80 to 70, it's going 80 to 90. What that means is Cupertino knows, Cook sees it, where demand's going to be in an AI-driven super cycle.
Do we already have a sense of what some of the AI applications are, consumer-facing, that are going to be sort of game-changing? Because I understand on a sort of corporate sphere, but just getting sort of an emoji that's personalized isn't necessarily a game changer.
Yeah, of course. And that's why what's so important, a year from now, you're going to have hundreds of apps on this iPhone, on the Apple ecosystem that are AI-driven. That's why developers, that's the hearts and lungs of this story. Apple's giving it to them, Apple Intelligence. Now the AI consumer story runs through Cupertino. And it just comes down to later this week, Cook's going to talk about, obviously June I view as almost a background noise to the main event. September, when this gets launched, what I view is really a strong upgrade cycle. Very importantly, China, this will be the last negative quarter. China growth story is back for Apple.
Before we went on air, you were talking about how you've got a lot of events to go to and you didn't really want to show up very casual. What does casual look like for Dan Ives?
So, well, first of all, the biggest insult for a college football fan, or if someone calls you a casual, to me, that is the most insulting you could ever get as a sports fan. If someone says you're a casual. Now, obviously, Farrah being a huge F1 fan, he is along with the Netflix, got me into F1. I will be going to my first F1 race in Vegas, wearing my Ferrari gear.
Well done. You're not a casual. A casual, I would say, is a Red Bull fan. You know, not been involved in a sport very long.
A casual, the biggest insult for any sports fan.
Without a doubt. Dan, it's good to see you.
Great to see you.
Dan Ives of Wedbush. I dropped by the green room this morning. Dan was talking to Julian Emanuel about what was happening in the equity market. Dan said he was this close to dressing in black for this morning's appearance.
Really?
When the Microsoft numbers first dropped. When they first dropped.
Before the conference call, I'm like, okay, I'm going to have to maybe dress like Farrah. All of a sudden, acceleration, the pink sports jacket
You
went
don't
back.
even have any black. There's no way.
No, but Farrah was going to bring a
For
black.
you?
Yeah, for
Yes,
me.
skinny black tie, the whole thing. The whole thing.
The whole gear.
The whole thing. Dan, it's good to see you. Thank you,
Great
sir.
to see you.
From New York, this is Bloomberg.
news that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
Live from New York City this morning. Good morning. Welcome to the program. Here are your scores on the S&P 500, higher by 1%. On the Nasdaq 100, up by 1.5%. On the Russell, up by 0.75%. On the month so far, the Russell up by 9.5% through yesterday's close. The Nasdaq 100 down by 4.5. We're talking about 14 percentage points of outperformance on the small caps, which is just absolutely phenomenal. That's the story of the month so far. I want to talk about the story of the last 15 hours or so. If you were at the Bloomberg terminal watching the numbers come out at 4 p.m. Eastern yesterday as the market was closing, and you heard from the likes of Starbucks and Microsoft, just the reports, not the earnings call, and then you went to bed, Lisa, you walked away from the market, I'm not sure you would have guessed this is where stocks would be when you woke up in the morning.
Were you watching me? I mean, honestly, that's exactly what happened. I was watching Microsoft come out, and yes, they did well, but at the same time, disappointed in the key metrics that a lot of people were looking for. Then Starbucks, second straight decline. Fell about 3% in terms of sales at coffee shops around the world. All of this sort of reconfirming the weak consumer after some of the data that we got yesterday. And I thought tomorrow's all going to be about how the consumer is falling out of bed, how we're not understanding how quickly this economy is rolling over. And boom, stocks, poof, are on a tear, and everybody has a really rosary narrative.
I think you can thank AMD and some chip makers as well, right? And I think the guidance coming from Microsoft eased things across the board, even with Microsoft still down. It was down a lot more than that in after hours yesterday.
It was down about 8% at one point, so really taking a huge cut out of a very big company at a time when people were expecting more. But this idea that the investment would reap some sort of acceleration in profits seemed to ease that.
You know, there's a ton of news flow when we're about 30 minutes into the program and we've hardly talked about the Federal Reserve. As the program grows a little bit older and we get further into it, deeper into it, we'll talk more and more about the Federal Reserve. We can start that conversation right now. I want to sit on the front end of the yield curve. Let's bring up bonds, 2-year, 10-year, 30-year, the 2-year at 4.36. This started with the note that Alan Ruskin at Deutsche Bank put out a couple of months ago around the Federal Reserve, and we've been counting ever since. The 2-year yield, the 2-year has rallied at every single Fed meeting for 6 consecutive Fed decisions. Can we make it day 7? The 2-year's down to 4.36, and I was looking at the numbers yesterday, Lisa. The last time the Fed met, the 2-year yield opened in the 4.80s.
Wow.
So we've had quite a move lower since the middle of June.
It seems as if the Fed, since the Fed really spoke last year and really changed their stance, this sort of pivot party that a lot of people talked about, it seems like the market has tried to imagine all the scenarios in which they're not able to actually cut rates. And the data comes in stronger than expected, and people say, actually, maybe not. And then the Fed comes out and says, yeah, actually, we're still on track. And that seems to be the story consistently. Today, my issue is, how much are people looking for September written in stone? And if they don't get that, do you get sort of a different move than, say, the 7th day of a rally in the front end?
A key feature of this program, I think, over the last few weeks has not been about September. It's been about, like, why don't they just move in July? And we've heard it repeatedly. And I think you all are familiar with these names now. Alan Blinder, the Fed should cut this week. Bill Dudley, I changed my mind, the Fed needs to cut. Al Arian, we're 2 meetings away from a policy mistake. Neil Dutta of Renmark put out a note yesterday, and I think he framed this perfectly. He said the risk of higher unemployment is much higher than the risk of rising inflation. And we often say on this program, the Federal Reserve is not in the crystal ball business. They're not meant to be these amazing predictors of the future. They've got to manage risk. They're in the risk management business. And if they sit the committee today and they all ask themselves the question, what is the biggest risk here? Of inflation shifting higher or unemployment climbing? And how do we need to respond accordingly?
The market basically is saying inflation is not the problem. We heard that from Julian Emmanuel. We basically have a renewed confidence that inflation is coming down. Think of all of the retail companies we've heard recently, the consumer-facing companies saying that they can only raise prices 1%, the lowest pace since the start of the pandemic. Here's the issue for the Federal Reserve. Is this something that is dormant or something that has really been killed? Lack of understanding there. On the flip side, you are seeing real internal and just a top-line deterioration in the labor market. That's definitely getting their notice.
That's the Federal Reserve. That's still ahead of us. Behind us is a BOJ decision. I want to check in on dollar yen, and then I'll get you some details on the latest from the BOJ. Dollar yen gapping lower by 1.5%, coming really, really close to breaking 150 earlier on today. 150.41 is where things are currently. Under surveillance this morning, the Bank of Japan raising interest rates to the highest level since December 2008. The BOJ also announcing plans to halve its pace of monthly bond buying. Governor Ueda saying any additional hikes this year will be data dependent. So we've got the rate decision, we've got the bond buying story, and you've got the guidance. And most people you hear from, the real Japan watchers, BOJ watchers, say the more important element of this is the guidance. And it looks like today's move won't be a one-off. They're set to go again.
Somebody asked, do you see 0.5% as sort of the ceiling on any kind of rate hike? And they absolutely did not say yes. They basically bowed away from that. Only about 30% of market participants expected some sort of rate hike as the base case at today's meeting. That gives you a sense of just how much people were sort of expecting them to signal and maybe work with the balance sheet, but not make this move. There are other questions, which is what is taking dominance in terms of this decision making? Is it the economy? Or is this really an issue of them saying, we don't want the yen where it is? We're sick of this. We're going to do this ahead of a Fed meeting that's probably going to signal a cut. This is a key time for us to, again, blow out some of the leveraged trades that have really been making the yen pretty weak.
Are you suggesting at some point before this two-day meeting over in Tokyo there was a from the Ministry of Finance?
I don't know if there was a, but I do know that there was this pressure that was coming down with really all of the polls saying that Japanese residents are feeling the pressure of higher cost of living, and that's one of the biggest deteriorations in consumer sentiment in that region.
Old school. They don't have to knock the door. They could just call, but you get the picture. Let's turn to this poll, or just text. Yeah, whatever it might be. Our latest poll from Bloomberg and Morning Consult showing Kamala Harris wiping out Donald Trump's lead in most of the key swing states. Harris overtaking Trump in Arizona and Nevada, while the former president still holds the advantage in Pennsylvania and North Carolina. The vice president polling better than Biden before he dropped out, according to this poll, overnight. This is where the momentum leader has been over the last week or so.
We've heard about people who weren't planning on showing up, who are revived and want to come and show up to the election. Here's the thing. What's actually changed? Have we really gotten any substantive differences with Kamala Harris versus Joe Biden? Is this just that basically there were the double haters, as people who are so dissatisfied, they feel like they have a new slate to some degree? Is this just a honeymoon phase, or is this something that's durable, especially with the convention coming up?
This is the relief rally in the Democratic stock after the former CEO headed to the exit, after everyone involved in the company piled on the pressure and said leave. We haven't seen the vice president sit down for a single interview and ask a single question, or rather answer a single question about what's happened in the last month. Never mind establish what the policies look like potentially over the next 4.5 years. We've got all of that still to come.
Well, we still have 3 months, so John, this is potentially going to work. I mean, look, this is what a lot of people are saying is there are these sort of lingering questions about the policy of the process of how this sort of went down and how this is going to go forward. A lot of people are looking to that key debate in September that may or may not take place to see really how they can face off. But what it highlights to me is just the dissatisfaction initially with the race.
Without a doubt, without a doubt. We hope that we actually get to see that debate in early September. Need to turn to this. Crude is rallying in the commodity market. Tensions are escalating in the Middle East. Hamas saying Israel killed its political leader in an airstrike in Tehran. Earlier, Israel targeting a senior Hezbollah commander in a strike in Beirut. Bloomberg's Jumana Basechi joins us now from Dubai for the latest from the region. Jumana, it feels like escalation. It looks like escalation. What comes next?
Yeah, well, it's been a very tense 24 hours out of the Middle East. I think the significance here is that Ismail Haniyeh was the leader of Hamas, one of the major political leaders. He was in Tehran when he got assassinated. So this is majorly embarrassing for Iran, the fact that it happened on their land. And it was also on the back of him actually being present in Iran for the inauguration of the new president. And remember, this is a president who ran on a so-called, quote, reformist agenda. He was looking to open up diplomatic channels with the West. Everything has changed in the last 24 hours because since the assassination of Haniyeh, we've got word from the new president saying Iran will make terrorists regret their action, will defend our territorial integrity. We also heard from the supreme leader, the Ayatollah Khamenei, saying that severe punishment awaits Israel. This does not sound like a regime that wants to re-engage in discussions once again with the West. So it does seem as though the calculus has completely flipped around. And up until this point, you may remember that back in April, there was a tit-for-tat exchange of rockets between Israel and Iran. Since then, they've been pursuing what people have been calling strategic deterrence. And while they've been politically supporting Hamas, they haven't been willing to put themselves out or put Hezbollah out for this full-blown war. Again, sentiment has changed in the last 24 hours, and there's a lot of concern in the region that this actually may escalate into something bigger. And certainly, the diplomatic channels are working hard to keep it contained to just the actions that we've seen in the last 24 hours.
Jumana, where is the pressure point internally in Iran, in Lebanon, to try to keep this contained?
Yeah, I think that's a really good question. And what the Secretary of State, Anthony Blinken, would say is it all boils down to that ceasefire in Gaza. It's difficult to see the situation calming down in the absence of a truce or a settling down of the war that's ongoing in Gaza. And you will also recall that Ismail Haniyeh himself was the chief negotiator engaging in all of those discussions with his counterparts and with the mediators, with Egypt and Qatar, to push through those discussions. And yet again, it looks as though some of those channels have been closed. You have the likes of Egypt saying that the killing of Haniyeh completely undermines those mediation efforts. You have Qatar, the prime minister, this morning saying, how can mediation succeed when one party kills one of the negotiators? Hezbollah themselves has said that they would only downplay some of the tensions on the border should there be a ceasefire. So it feels like that is the main pressure points going forward.
Jumana, this was great. Appreciate the update. Jumana Basechi there of Bloomberg, happy to lead our regional coverage on top of this story overnight. Norman Rule joins us now, the former senior U.S. intelligence official. Norman, I want to work through this individually and just get your thoughts. So we've got two strikes on two different territories. And I want to understand from your perspective if one is more significant than the other. Can you make that call this morning?
Good morning. It's certainly more significant that Ismail Haniyeh was killed in Tehran, taking place, as your correspondent noted, so soon after, within hours of the inauguration of Iran's president, in an IRGC guest house. This is a major humiliation for Iran and the Revolutionary Guard itself. Hence, the supreme leader has come out stating that Iran must respond to this. For Hezbollah, losing their senior-most military official would also require a response, but I think you should look at this as a collective, and you should add to this the fact that the Israelis have also struck the Houthis in a retaliation attack, and indeed the United States has struck the Houthis and Iraqi militias to prevent operations in the last 24 hours. I think you have a collective issue here, and for Tehran, they're going to have to respond to it in that manner.
What kind of response do you expect from Tehran, Norm?
Well, it's not impossible they will strike Israel directly, but it's unlikely. Their performance in April was a good propaganda blow, but at the same time, it really didn't achieve much. And at the same time, Israel was able to demonstrate an exquisite capacity to take out Iran's most impressive air defense facility. And the killing of Haniyeh and the killing of Shukr in Beirut also demonstrate extraordinary intelligence skills by the Israelis, which are likely not at an end. So Israel can do more if pushed. So I think Iran's going to have to hurry up and slow down. They're going to have to come up with a plan that doesn't start a war, that doesn't risk their officials, but they will have to undertake strikes against Israel itself. I think one other point to note is that Hamas itself is in a position where it needs to respond. And it's a very different Hamas than 10 months ago. 10 months ago, we might have seen hundreds of rockets or missiles. The next few days will indicate what military capacity Hamas has left at this time in the conflict. So this is going to take a little bit of time for the Iranian government to sort out.
Norman, this looks like a series potentially of escalatory steps. I just wonder if there's a more constructive way of framing things. You touched on what happened in April. Some people might describe April as a series or maybe an episode of billion-dollar skeet shooting, that Iran fired a lot at Israel and hardly anything, if anything, actually got through. And that what we've seen established overnight is the ability of Israel to strike inside Iran in a very different way, in a way that Iran can't strike Israel. And I wonder, Norman, if from that perspective, whether actually what we've done overnight is establish a series of deterrents, or rather a big deterrence with the acts of Israel. I mean, can we frame things that way, Norman? Would that be the more favorable way of framing things?
Well, it's possible. It's also possible to say that Hamas, with Haniyeh's killing, will sense, in essence, final moves against its leadership and its forces in Gaza, and therefore come to the conclusion that it needs a ceasefire in order to survive. However, Iran has always used asymmetric responses, knowing that it can't compete conventionally and even on intelligence with Israel and the United States and others. So I think Iran is going to think how it uses its proxies and its asymmetric forces, and that could be missiles, that could be rockets, that could be assassinations. And again, this will take enough discussions within Tehran's National Security Council and their review of their own intelligence and capabilities that are in place at this time.
Norm, as John was mentioning, a lot of the rationale for some of the strikes and the back and forth of missiles leading up to this moment has been that there is not a ceasefire, that the conflict continues in Gaza. Is there any sense that we're seeing progress being made in some of those discussions to reach an end to that conflict?
If you look over the last 10 months, you see several themes. Hamas has asked for a complete Israeli departure, an end to the conflict, and its survival as the major operational element in Gaza. You have had periodic statements from Western actors that we are close to something, we are near a deal, but we've never actually seen a hard statement from Hamas to say they're willing to accept a ceasefire instead of demanding a permanent end to the conflict. If you're in Israel, the idea of a permanent end to the conflict is just not attractive to Israel's hardline government, although I do believe it is something acceptable to Israel's military. At this point, with Hamas on its heels, and we're approaching the final stages, albeit with perhaps months to go, of the Gaza conflict, I don't think that ceasefire is something that's going to happen unless Hamas makes concessions in the coming days.
Norm, appreciate your input and clarity. Thank you, sir. Norman Rule there, the former senior intelligence official. In just the past week, we had someone come on this program and give us the impression that we were somehow equidistant from both an escalation in the conflict, a regional conflict, and both at the same time as close to a peace accord, or at least a ceasefire, in somewhere like Gaza between Israel and Hamas. I think overnight it certainly feels like we've come closer to a regional conflict than anything else.
And this raises the specter of accidents, which you put out there, and it's true. When you have people lobbing missiles at one another, guess what? Sometimes they go in weird places, and that can really cause things to escalate. Norm put it differently. He said that Israel is in the end phase in its Gaza operation, so it raises some different stakes for all the players, especially because it is a much diminished Hamas, and an Iran that is funding both Hamas and Hezbollah, trying to figure out exactly what their game plan is.
Look out for plenty more coverage to come out of the region from Bloomberg TV and Bloomberg Radio over the coming day or so. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's get across to Danny Berger. Hey, Danny.
Hey, John. Indian officials say more than 90 people have been killed in landslides that buried several villages in the southern state of Kerala. Hours of heavy rain triggered the disaster, and bad weather continues to hamper rescue operations. The first landslide happened at 2 a.m. on Tuesday, when most people were sleeping. The Indian Army has been deployed to help with rescue efforts. Shares of HSBC rallying by 3.7% in the London trade. Earnings topped estimates, and it announced a $3 billion stock buyback. The buyback is a function of HSBC's confidence for the future, CEO Noel Quinn said in a Bloomberg interview. He will hand over the reins to the current CFO, George Eldery, on September 2nd. For his part, Eldery said that the bank is planning to keep its overall bonus pool flat for the year as it works to keep costs contained. Shares of Starbucks are also higher, 2.7% in the pre-market. It reported quarterly results that were in line with expectations. The coffee giant also reaffirmed its full-year guidance, suggesting that turnaround efforts are starting to stick. While global same-store sales were roughly in line with expectations, they did disappoint in China. Starbucks also confirmed that activist investor Elliott Management has taken a stake and talks have been constructive. That's your brief, John.
Danny, thank you. Appreciate it. More from Danny in about 30 minutes' time. I'm next on the program, setting the stage for September.
We think they are going to signal a September cut, but the economy appears to be doing okay here. They will be quick to, to start to drop interest rates, I think, if you do see a labor market that's loosening or rolling over more than they expect.
That conversation up next, the Fed decision just around the corner from New York City. You're watching Bloomberg TV.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways it has fueled some of my determination. It's fueled some of my, okay, I'm going to show this is possible, a sense of, I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice, saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. Go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Stocks looking good here. Of course, the fate of this session in the hands of one man, Chairman Powell, at 2:30 Eastern Time at that news conference. In the hands of a bunch of other things as well, but there's one. Equity futures positive by 1% on the S&P, and the bond market, things settled down, 413.36, levels we haven't seen since early March on a 10-year yield going into this Fed decision. Under surveillance this morning, setting the stage for September.
We think they are going to signal a September cut, but the economy appears to be doing okay here. I think he could actually come across as being a bit more balanced, although we do think they are going to cut in September relative to what markets are pricing. They will be quick to, to start to drop interest rates, I think, if you do see a labor market that's loosening or rolling over more than they expect.
So here's the latest. Investors counting down to the Fed decision at 2 p.m. Eastern Time, and Chair Powell's news conference just 30 minutes later. Laura Rame of FS Investments writing this: Powell is unlikely to give any hints about anything after September. I had been at one rate cut in the second half of the year, but given very friendly inflation data, that may now increase to 2 rate cuts. Laura joins us now for more. Laura, I want to frame this question based on some of the research, a note that we got from Neil Dutter of Renmac. Neil's basically asking, and he's saying what he thinks, but I want to know what you think. What is the greatest risk here for this Federal Reserve? That inflation reaccelerates or that unemployment starts to pick up? And do they need to start to address that balance of risks at this meeting?
I don't think they need to address it at this meeting. And something I've been hammering is that labor market renormalization should not be mistaken for any labor market weakness. We're renormalizing at a very tight labor market. We forget that that's where we were before the pandemic. It's not a negative message. It's just that when Chair Powell says that risks are more balanced, we may actually need to take him at face value on that. They are fairly balanced. So it's one reason why I think markets really need to just take this meeting by meeting. We forget that we had 2 really benign inflation reports. The 4 before that were pretty unfriendly. Inflation actually popped higher in some of those core services measures. So I think that is the clear message. We shouldn't try to read too much beyond the fact that they need to be data dependent right now. They clearly want to cut. They've been wanting to cut for some time. September is going to be the date, but after that, markets shouldn't get ahead of themselves.
What would you have to see, Laura, within the employment data in particular, to be more concerned about the labor component as, say, outweighing some of the inflation risks that you see perhaps as greater than the market is counting for?
I think, my canary in the coal mine is always initial claims. We're seeing weird noise, and, that's maybe a whole separate segment on what's going on between the payroll numbers and the household numbers. There is some noise in the background there. To me, desert island, one economic indicator, it would be initial claims. And as long as it's below 300,000, I'm not worried about the state of the labor market. That said, the unemployment rate has moved higher. This is typically the tough part to really navigate, is getting that unemployment rate to move slowly up and not just shoot higher in an asymmetric way. So the next 6 months will be really important for the unemployment rate. Week by week, it's initial claims.
Based on the commentary that we're hearing from companies, it doesn't seem like they've got pricing power. It doesn't seem like consumers are accepting the price increases as they have over the past few years. Why do you think inflation is still such a concern?
To me, it's a story of services. That's really what this comes down to. And I think something that we're missing is the fact that we finally saw relief on the rent piece of the inflation puzzle. That's what I think finally gave us this opening to cut rates in September. But if you look ahead to the beginning of 2025, which I feel like will be here before we know it, we are seeing multifamily construction just plunge. We know that those starts have cratered, and that's an 18-month lag time.
Lara, we've got to leave it there. It's great to catch up. Lara Raim there of FS Investments on the Federal Reserve. What is it about July? Never mind 2025. It's like the fastest month of all time and yet the most tiring month of all time. Emily Rowland's going to join us in just a moment. She calls it the least relaxing month in years.
I love it. She's like, this should be being on the beach, but there's nothing less relaxing than being underweight small caps into July. At the same time, you start talking about Joe Biden was at the top of the presidential ticket, is no longer. You talk about the rotation in the equity markets. You talk about the deterioration in certain employment metrics leading to this call, increasingly about a July rate cut. Add to it whatever you want to put on your bingo card.
Assassination attempts.
Assassination attempts. Well, yeah, they're of course.
That happened.
I mean, seriously, though, that happened before Joe Biden dropped out. I mean, what else do you want to add to this bingo card?
Just amazing. Before the month closes out, we get a Federal Reserve decision a little bit later on this afternoon. Lisa mentioned payrolls, really, really important on Friday. Just a sneak peek again of our survey. The median estimate in our survey still in at around 175. The previous number 206. Later, of course, we get ADP, and tomorrow, Lara was talking about claims. The estimate for jobless claims tomorrow is 236, previous week 235. Coming up, Emily Rowland of John Hancock will speak to Henrietta Trace of Vader Partners, Leslie Falconio of UBS, and Bloomberg's Michael Shepard on the latest in the chip sector. From New York, that's all still to come. The second hour of Bloomberg Surveillance up next.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets.